Hello, um, Oreva, Vincent, or Sanwa rather, sorry. Hello.
Hello.
Just is Teresa joining this meeting? Are we there?
Pedro, can you hear me?
Yeah, I can hear you, Oreva.
Okay.
Morning.
Okay. Good morning. I
Okay,
think
so I was asking, because Teresa mentioned that you guys have videos that you will be playing.
yes.
Okay. So at what point are these?
Let me call you. Let's use phone. Welcome, Beatrice. Welcome, Eve. We'll comment soon. You're welcome.
you come to Lagos Business School, you join the community that's made up of not only the staff and employees of Lagos Business School, but everybody who has participated in any program at the Lagos Business School. Our mission is to develop responsible managers for Africa and the world at large. And indeed, the first Chief Executive Program participants of Lagos Business School coined the term the Oasis of Sanity to describe Lagos Business School. And therefore, as part of the community of Lagos Business School, we expect that every member of that community will be focused and committed to ensuring that we develop professional managers for Africa and also that we influence society. And how do we go about influencing society? By all the things that I hope that you have learned or that have been strengthened by your time at Lagos Business School. When you attend any of the programs at Lagos Business School, we make bold to say that in terms of the content, you will get the same as you get in any world-class business school in the world. And we make that promise because we have attained international accreditations from the two topmost accrediting bodies in the world. And we will only get that accreditation if they believe that the quality that we offer is the same as offered in top business schools of the world. But where we're different is that we talk about the peculiarities of doing business in Nigeria and Africa.
What is it about Africa? Some see struggle. We see opportunity. This is where we thrive. Africa is a land of contrasts. Hundreds of millions of our people live without access to clean water and electricity. Yet we have more entrepreneurs than any other continent, and by 2050, half of the world's youth will be African. Africa's been busy. We're urbanizing, embracing technology. We're sprinting forward with some of the fastest growing economies in the world. It's time for African-driven solutions to African problems. It's time to seize the moment and create our own narrative to build the Africa we want. Business has the power to bring about change at scale and make money doing so. The shared value business model reconnects business success with social progress. Shared value is also about partnerships, building business networks that create inclusive growth. The power of collaboration should never be underestimated. If we can bring together businesses and communities from across Africa with a shared purpose, we can build economic value and, most importantly, value for society. It's time for Africa to become the economic powerhouse of the future. Become part of Africa's most powerful shared value business network. Join the Shared Value Africa initiative today.
Good morning, good afternoon, good evening, or good day, depending on where you're joining us from. My name is Oreva Ataya. I am the manager of the Lagos Business School Sustainability Center, and we're very glad to be hosting you this fine morning in Lagos, at least. Welcome to the third Africa Responsible Business Forum. We're kicking off now, and I would like to welcome to officially open the forum, Dr. Franklin Ungu, the director of the Lagos Business School Sustainability Center.
Thank you very much, Forever, and good morning, everybody. Good afternoon and good evening. As Forever said, it depends on where you're joining from. Here in Lagos is sunny and very bright. Of course, if not because of COVID, we will have all been gathered here now and enjoying the very bright weather that we have in Lagos. So on behalf of the Lagos Business School and the Shared Value Africa Initiative, I warmly welcome you all to the third African Responsible Business Forum. The ARB is the brainchild of our dean, Professor Chris Ogbeche, and is positioned to continuously explore the emerging African business environment with a focus on sustainability, shared value, and African business solutions for Africa. The LBS Sustainability Center has, over the past 10 years, been translating theory to practice in 4 key thematic areas. The first one is sustainable development and corporate sustainability. Second is responsible business and leadership. Third is circular economy. And fourth, but not the least, is nonprofit management and social entrepreneurship. Through our courses, forums, and research, the center has reached thousands of individuals and organizations in Nigeria and beyond. We are glad to have you join this year's ARB Forum. As I earlier mentioned, ARB is an idea sharing platform that supports the old and new generations of African business leaders to look beyond profits by adding real value to Africa economically, socially, and environmentally. Interestingly, the theme of the forum this year is driving Africa recovery and growth with responsible business. We all agree that this was inspired by the need for African economies to bounce back better and more resilient from the economic and social shocks created by the COVID-19 pandemic. This year's forum is timely because as African economies seek to restart from the ruins of the pandemic, it is clear that the old way of doing things might not be sustainable. It is therefore imperative that there is a paradigm shift in our approach to business and development, while being conscious of the fact that no one benefits unless we all benefit. I hope we all remember Ubuntu Ubuntu. The forum has been structured as a 2-day virtual program with a mix of participants from the private sector, public sector, civil society, organizations, honorary organizations, and academia. We also have participants from different African countries, Europe, North America, and Asia. And on day 1, Tuesday, which is today, the discussion of the forum will center on 2 thematic areas. The first one will be on financing Africa's sustainable recovery from COVID-19. And the second one will be on gender parity in the workplace. I can assure you that if you go through the program, you will see that we've also arranged the best of the best in terms of the speakers, in terms of the panel members. So I'm also assuring you that the conversation will be very enriching and it will be very insightful. Tomorrow, which is day 2, the conversation will be on, first, leveraging the African Continental Free Trade Agreement for sustainable development, which is very topical at the moment. And the second one will be on building strong institutions, SDGs, shared value, and responsible business. I'm sure with this, you will agree with me that the topic and for this session, for this program, is very, very germane and very topical with the current climate. I would like to thank all our guest speakers for making our time to be part of this very timely engagement. This forum will also be possible, would not have been possible without our community partners, particularly Shared Value Initiative and Area School of Business, Raya University. We are glad that you choose to be part of this year's forum, and we look forward to an interesting and fruitful knowledge sharing session with you all. Let me, at this point, invite the Dean of Lagos Business School, Professor Chris Ogwechia, to kick things off with an opening address. Professor Chris, please. Thank you.
Thank you very much, Franklin. I hope you can hear me. Good morning.
Good morning, we can hear you.
And good evening, distinguished ladies and gentlemen, wherever you are in the world. It is my pleasure and honor to welcome you to the third Africa Responsible Business Forum. I hope you are keeping safe and well, because COVID is real all over the world. And because of COVID, we cannot actually meet in person for this forum. That's why we've adopted the virtual mode. The outbreak of COVID-19 has affected millions of people around the world, harming both the physical and economic health of many of the world's nations and citizens. Unlike the 2007 and 2008 global financial crisis, where business and the financial sector in particular were part of the problem, today businesses can now play a key part in the economic recovery from the ruins of the current pandemic, and hence the theme of this forum, driving Africa's recovery and growth with responsible businesses. It is important to note that businesses can help to alleviate the immediate impact of COVID-19 by serving as the conduit between governments and communities to help deliver alleviation measures. Indeed, the current economic crisis presents a unique opportunity for business leaders to rethink about how they can look beyond profits to focus on creating shared value for all. Today, business success is no longer measured in financial value alone. It is measured in how companies help to create sustainable societies by taking practical steps to address major social and environmental challenges. In order to attract investment and retain the social license to operate, companies need to rebuild their strategy around collaborations or partnerships and positive social and environmental outcomes. Corporations can no longer hope to buy public favor through gestures of philanthropy. Corporate social investment initiatives are not enough to obtain a social license to operate anymore. More so, increasing state and public support for the implementation of United Nations Sustainable Development Goals, the SDGs, is contributing to the pressure on companies to show the material ways in which they are playing a role in reaching the targets. Companies are being asked to go beyond the requirements of regulatory compliance and adjust their operating models to meaningfully address global challenges, including those related to poverty, inequality, climate change, environmental degradation, prosperity, as well as peace and justice. As African economies look to restart, it is apparent that doing business as usual is not the way to go. There needs to be a paradigm shift towards a more sustainable recovery. With just 10 years remaining to achieve the UN Sustainable Development Goals, the global community, includes governments, companies, and multilateral agencies, must act individually and collectively to create innovative solutions that deliver sustainable prosperity for all. Businesses in particular can make the world a better, cleaner, and safer place. and minimize the negative impact of their activities by acting responsibly. However, the business community collaborates. The exact role businesses can play in helping the recovery of African economies and stepping up the progress towards the SDGs are two key issues for consideration at this forum. A collaborative approach is not just the right thing to do, but also the smart thing to do in tackling poverty, unemployment, climate change, inequality, and other development challenges of Africa. If we learned anything from the current pandemic, it is that doing nothing is simply not an option. The third Africa Responsible Business Forum will showcase how Africa businesses are attempting to be responsible and provide an avenue for collaboration, innovation, and learning for responsible business practices in Africa. While the primary focus of this year's ARB Forum is on the role of the private sector in Africa's recovery, attention will also be given to how the public sector and civil society can collaborate with the private sector to foster the sustainable development we actually need in Africa. I have no doubt that all the participants will benefit from this forum. You'll probably take away one or two things, one or two ideas that will enable you to drive your businesses in the right direction. On this note, I warmly welcome you all to the third edition of the Africa Responsible Business Forum. Have a wonderful forum and fruitful deliberations. Thank you very much. Over to you, Oreva.
Thank you very much, Prof. and our Dean, for that welcoming and opening address. We hope all our participants are already inspired to take action from everything we discussed today. So we're quickly moving into our next session, which is, we'll be looking at insights from some of Africa's business leaders around the topic private sector responsibility in financing Africa's sustainable recovery. Following that, we'll have a panel discussion where we'll dive into the issues. So I would share my screen now for us to look at those insights.
Good afternoon. My name is Kayode Omorige. I'm a senior faculty here at the Lagos Business School, and I'll be discussing over the next few minutes my take on the impact of the COVID-19 pandemic on the Nigerian economy at a macro level, and what I think the impact will be on Nigerian businesses, and perhaps more importantly, what I think businesses should be doing to respond to this situation. My discussion will be leveraging a similar conversation I had on the same medium sometime in December last year. At that time, we were looking at the possibility of a global recession and how that might impact Nigeria. Some of the drivers at the time were the fact that the IMF had revised downward their outlook for growth from about 3.9% about 3% for 2020. We also noticed at the time that a number of economies, including US, China, Germany, European economies, have all been reducing interest rates in a bid to head off the possible recession that they saw coming at the time. We also noticed that the United States up to 2019, up to about 2 weeks ago, had in fact been having a very long 10-year bull run. So for some pundits, they believed that there was no recession in the horizon, and some thought there was a likelihood of a horizon. It was pretty much 50-50 at the time. And nobody at the time they deliberately contemplated the impact of this coronavirus in the scenario. Well, it's happened. And on the back of that, we have this oil price war between Saudi Arabia and Russia. And this had led to a crash of oil price to as low as $29 to $32 per barrel. Now we should remember that the IMF had also indicated that if anything should happen to drop the oil price to about $50 per barrel or below, that may trigger a recession for Nigeria. So what will happen now that oil price is below $30, which is far below our benchmark of $59, $57 per barrel? Clearly, it goes without saying that we should be expecting some form of recession before the end of the year. On the back of that, we find out also that the foreign exchange, the Nigerian currency has been devalued, at least on the parallel market. Even though CBN suggests that they are ready to defend the Naira and they're not in a hurry to devalue the currency, I am of the view that it is almost inevitable that before the end of the year, we will see a devaluation of the Naira to a range of about 380 Naira to the dollar, or probably even worse, up to 400 Naira to the dollar. Now, so what are all these things likely to do for the Nigerian economy? Clearly, like I mentioned earlier, there will be a recession. We expect there to be a spike in inflation. We'll see double-digit inflation sustained, perhaps in the neighborhood of 13-14% per annum, or even higher. Like I already mentioned, there will be a devaluation of the currency to as much as 400, probably even 420 to the Naira to the dollar before the year runs out. And so corporates will find themselves in a situation where consumer demands would have been depressed significantly, and so there will be an adverse impact on revenue. Costs also will go up, cash flows will go down, and companies will find themselves seriously constrained to be able to do what they need to do. So the question should be, how should corporates try to respond? My prognosis, my recommendations have not changed significantly. If companies at this point in time have not started building some robustness into their balance sheet, it may in fact be too late, but they might still find ways of doing that. For example, if you have debts on your balance sheet, you need to be paying down those debts as quickly as you can. If you have foreign currency denominated debt on your balance sheet, you probably should have paid them off, or you should have put in place currency hedges that will prevent you from having to pay significant Naira outflows against the dollars that you are owing. From a practical management perspective, businesses should try to be more efficient. This is a time to look inward, see where your processes can be improved to ensure that cost is going down, because clearly revenue will go down. It's also important to look at the asset configuration of a business to see which assets are idle, which assets are not income generating, and begin to shed these assets so as to improve liquidity in the business. Because one of the things we expect to see going forward is a severe liquidity crunch for businesses and for the economy in general. So companies should look at their asset configuration and begin to shed weight in that regard. There's going to be a lot of asset impairments. There's going to be a lot of risks to the financial portfolio of businesses. Assets are going to be diminishing in value. So if we take all of these things together, it's tough times ahead, but we need not panic. The truth of the matter is that it will pass at some point in time. We only hope that sooner rather than later we find a solution to this COVID pandemic. And once we get over this situation, things should begin to get back to normal. But I will advise that for the rest of the year, things are going to be increasingly tough. It's going to get pretty much worse before it gets better, but there's some light at the end of the tunnel. In addition, companies must build in and manage efficiencies across their entire supply chain, the operations chain, and the value chain, right from the procurement function to the inbound logistics, to warehousing, to inventory management, to sales, and so on and so forth. Companies must look for where to get efficiency gains just to reduce the cost of doing business, because revenues are going to be significantly compromised. When revenues are compromised, when the cost of doing business rises, the only way businesses can thrive and improve liquidity is to squeeze out efficiencies across the entire business operational value chain. Inventory management is key. This is not the time for businesses to begin to pile on inventories in their warehouses. Sales and marketing to do the best they can to push these goods out of the warehouse as fast as possible. I'd mentioned at some earlier forum that companies should make themselves as indispensable as they possibly can to their consumers so that they can actually manage, the impact on revenue to the best that they possibly can.
think now in business you have to be agile.
Well, Jeremy, you were saying earlier on, and I remember, ABSA transitioned with a lot of razzmatazz earlier this year, and then boom, coronavirus hit, and everything was put on pause. Has it been tough?
Yeah, I think this has been tough for many businesses, and ours is not excluded. Nobody could have predicted this would happen. But, I think now in business you have to be agile. I think you have to be ready to respond to whatever the environment throws at us. And our team, I think, has responded pretty quickly. We've re-looked at our priorities. Some of the core agenda items still remain the same. We're still as committed to our customers. In fact, even more than ever now. We're committed to growing our business. We're committed to helping play a role in growing this economy. So I think for us, it just means we had to shift gear a little bit. And I think, whilst this is a big challenge, it's also an opportunity for us to show that we can be a force for good, here in Kenya.
Okay, at the same time, individuals, SMEs, even corporates are going to have a hard time right now and facing financial challenges. How can banks make it easier for them, banks like yours, Jeremy?
I think now is really the time to show care and understanding for customers. Like I said, this is a 1 in 100 kind of event. And I think if we use the normal rules that people would take, if somebody's defaulting on a loan, you quickly try and come in, and sell their security. I don't think that's the answer in this occasion. I think for us in particular here at ABSA, we're really trying to listen and understand the challenges our customers are going through. We're working with them. We've come up with a number of initiatives, as have other banks, including repayment holidays. So for us in ABSA, we've given a 3-month repayment holiday to tens of thousands of customers. We've already restructured over 10 billion shillings in customer loans to ease their payments. Because now the essential thing is that those businesses don't go bust, because those businesses are employing Kenyans and we need to support them through this difficult period. So we really are willing to work with them. We're willing to talk to them to see how we can help them through, working with our regulator, working with the government around these plans. And I think some of the things that have already been done, like the reduction of the cash reserve ratio, is helping the liquidity here.
This gap it's all about now after the COVID-19 shutdown. How do we ensure success in the business?
Even though my sector is a technology firm, IT wasn't really affected. But I needed to understand the changing dynamics of the business environment, and because it affects a lot of our clients. And if our clients are not doing well, we're also not doing well. So I needed to understand what was happening to the manufacturing sector, what was happening to government, what was happening to financial services.
So my business is centered around the capital market. And there have been a lot of changes from the debt capital instrument and the equity market. So many changes that is trickling down to all the capital market operators. And those changes have required that there must be adaptations of new skills, new knowledge, and the way we react to disruption generally, and the agility that is required of every business and team member to survive a time like this.
Execution has always been a challenge. A lot of strategies come up, and then getting them to actually see the light of day and achieve the desired objective has always been a problem.
Ensuring micro enterprises, innovators, innovation hubs are all a part of what will be accessible to finance. And as we do that, then we also think about technology, enabling them either as innovators, so then we can start distributing the aggregation and decorporatizing big techs and decorporatizing technology, like with the way we decorporatized multinationals in Africa with large enterprises, medium enterprises, small enterprises, micro enterprises, giving everybody a chance to play in the economic landscape. To me, that is what financial access would mean, the challenges that it confronts, but also know that one of the biggest promise is the UN Strategic Development Goals, the advocacy and embrace of that. This upside of COVID is that it has given us an opportunity to rebuild the world afresh. And the question is, can we rebuild the world with purpose first? And the primary purpose I would put ahead of all others is inclusion, whether it's financial inclusion, whether it's digital inclusion, whether it's social inclusion. The essence of rebuilding the world afresh should be inclusion, leaving nobody behind and marginalizing nobody.
Great. I hope you enjoyed those insights from various business leaders and academics working in and doing business in Africa. This is really just to frame our conversation as we move into the topic is sustainable recovery, a pipe dream, and what is the responsibility of the private sector. Before we do that, we have a few minutes, so I'm going to invite our partners for this forum, Tiki Bernard, who's the founder of the Shared Value Africa Initiative, to share some thoughts. Tiki? Okay, just a moment. You'll be able to speak now.
Thank you. I just couldn't unmute myself. So welcome everybody to this very important discussion that we're having today on the responsibility. And I think for me today is going to talk about our responsibility as business really. So from a shared value perspective, just a quick little bit about our, working with the Lagos Business School. Thank you very much, Prof. Chris, very privileged about this. But we're here today to talk about what can we do as business to create sustainability, to create that social impact, and to really help us, all of us on the Africa continent, to grow our economy. A little bit about the Shared Value Africa Initiative. We're a Pan-African organization, and we're here to work with businesses and with academic institutions, with the private sector organizations, with governments, and with civil society to help us create shared value. Because shared value is a business management concept where we as business can address societal and environmental issues profitably. So for some of you, I'm not 100% sure how many is au fait with the concept of creating shared value. It comes from the Harvard Business School. It was created by Professor Michael Porter and Mark Kramer. And the Shared Value Africa Initiative is the regional partner of the Global Shared Value Initiative. We've got partners in India, Hong Kong, Australia, and in North and South America. So I just want to say today is a really, we've got great discussions, as Ariba said, and as Prof has said as well. And for us as business, is listening to everybody today and hearing what people are saying, because we have an enormous responsibility to help our beautiful continent to actually recover from COVID-19. So back to you, Ariba. Thank you for the opportunity.
Yes, thank you very much, Tiki. And I'll now be inviting our other partner for this forum, Professor Abel Kinoti, the Dean of the Rara University School of Management, School of Business. So he'll be able to speak shortly. Okay. Professor Abel, I think we can't hear you. Please, could you unmute? Yes, please try now.
Oh, thank you very much, Oliver. Sorry for that short problem in trying to connect. Good afternoon, good morning, wherever you are. As you've heard, my name is Professor Abel Kinoti. I'm the Dean School of Business at Riara University. And I'm indeed delighted to be part of the Lagos Business School Sustainability Center. And I owe lots of credit to Professor Chris and Franklin for having initiated this discussion on how to really get Africans light into their little perspectives on how business can be done. Riara University or Riara School of Business is a relatively young institution founded in 2012 by Professor Enda Gachukia and Daniel Gachukia. Those of you who remember very well on the foundations of the African Union, there was a chapter that was referred to as the Forum for Africa Women Educationists, or the Lizard Forum, which was founded by Professor Enda. Now, what I'm trying to argue to is that as an institution, we are really strongly founded on the belief that the responsibility of changing this particular given place, this continent, is really our responsibility. So we have tried as much as possible to look for ways on how we can solve African problems in a more indigenous manner, looking for compatible solutions that can be used to solve our problems, as opposed to being driven by global phenomenon. Some of them, like what we are really facing right now, we are not able to address. We were part of the team that hosted the Africa Responsible Business Forum in 2019, and we are looking forward to more fruitful discussions in this forum on driving Africa's recovery and growth with responsible businesses. So we are really very happy and delighted to be part of the process. Looking forward for more discussions. Thank you very much.
Thank you very much, Professor Abel Kinoti. Thank you very, very much. And now I would like to invite our anchor for the next session. So we're going now into a panel discussion on the topic, is sustainable recovery a pipe dream or reality? Private sector responsibility in financing Africa's sustainable recovery. Our speakers include Geoffrey Udondo, the Chief Executive Officer of Nairobi Securities Exchange. Thank you and welcome, Geoffrey. Tinua Adeawe, the Chief Executive Officer of NGX Regulatory Limited. Very glad to have you, Tinua Adeawe. Welcome. Shamila Ibrahim, who's the Chief Sustainability Officer of Johannesburg Stock Exchange. And the panel will be moderated by Maria Glover, the project lead for the Impact Investors Foundation. Maria?
Thank you very much, Oreva. A warm welcome, ladies and gentlemen, to this fireside chat on a very important topic, as already introduced. Is sustainable recovery a pipe dream or a reality? Private sector responsibility in financing and sustainable recovery. I was very glad to have joined the video this morning, and what the various leaders had talked about this morning pointed to the fact that the private sector has a role in transforming and delivering sustainable recovery in Africa. And the discussants will be critically looking at their role in leading Africa's sustainable recovery, as well as the role of other key stakeholders like the government and policymakers in creating an enabling environment to support and incentivize the private sector investment in key development sectors. The question is Africa ready for sustainable recovery? And how well is the private sector positioned to finance a sustainable recovery across the continent? These and many tough questions will our three prolific speakers be addressing in this fireside chat. Just to mention that this session will be highly interactive and participants will be given the opportunity to contribute to the conversation and ask the panelists questions. You can also put your questions in the chat box. I'd like to call on each speaker to introduce themselves and to deliver a minute opening statement. So I'll call the first person on my list. I'll start with a lady, Tinuade Awe, CEO, NGX Regulation Limited. Please give us your opening statement, madam. Thank you.
Thank you very much, Maria. It gives me great pleasure to be here at the third Africa Responsible Business Forum to talk about this very topical issue of sustainability. I think it's a discussion whose time has come and has been coming for a while. But I think the issues that we've seen from COVID-19 really mean that we have to take a very concerted view and really drive the issues from an African perspective. And so I'm looking forward today to talking about this issue with respect to finance. As some of you may know, I actually, we just operationalized our business. The Nigerian Stock Exchange demutualized, and we operationalized the demutualization yesterday. So this is actually one of the first things that I'm doing as head of NGX Regulation, which is the independent regulatory arm of the group. And prior to our demutualization, we've been very interested in sustainability issues because we think that the private sector has to take a leading role. We developed sustainable disclosure guidelines in order to help investors to help companies to have a structure through which to discuss issues of sustainability and to help those who are interested in investing to be able to really see what companies are doing from a sustainability perspective. We also have worked hand in hand with GRI to develop issues around reporting and have several other initiatives that I will talk about, all aimed at helping the private sector to get ready for sustainability and sustainable organizations. So this is just supposed to be a 1-minute introduction, so I don't want to get into the details, but just to say that I'm keen to be here and to talk about the issues. Thank you very much.
Thank you very much, Tinuade. I'd like to call on Shamila, please, your 1-minute introduction and also an opening statement.
Good day, Maria. Good day to all the listeners. It's an absolute pleasure to be here and such an honor to be invited to this forum. I want to say a huge thank you. Also to say that, Maria, you've mentioned that this is an idea whose time has come and the need is pressing. And, I want to contend that the time and the need was probably 20 years ago already. But, to move quickly now, I think we still have time left. Fortunately, the 2030 agenda in relation to achieving the Sustainable Development Goals in terms as being our common reference point and really our common goal as society is it's right there. It's 9 years from now, time is ticking. So we need to do that. I think at the JSE, for example, we're very, very keen on saying that we want to see the markets used as a force for good and not to say that lightly, but to really fundamentally rethink how we think about capitalism, how we think about using the markets as an opportunity to reallocate money to where it's needed, and to help business in reconceiving what we do and why we do it to maintain effectively our social license to operate. So I'm very keen to be part of the discussion today and honored to be here as the JSE. Looking forward to chat. Thank you very much, Maria.
Thank you very much, Shamila. And last on my list, Jeffrey Odundu.
Thank you very much, and good morning. Great. For me, as the NSC, we're very delighted to be part of this conversation today. we have embraced sustainability as a key imperative for the organization. As members of the UN Sustainable Stock Exchange initiatives, we deliberately decided to make this one of our key pillars in our strategy, and it's been a running pillar rolling over strategy to strategy. One, because we recognize that to do good business, you must also make sure that your environment and the community around you are also benefiting, true to the principles of shared values. So the interventions we put in place involve around ensuring that our customers, our companies embrace good practices, strengthening around corporate governance, which is a key pillar for any listed company, and ensuring that there's a very good interaction with the community. The environmental aspects of the businesses are also very, very good and aligned to international standards. And so as such, we are very happy that we continue to have these conversations. We have deliberately set up a dedicated division at the exchange that drives sustainability with very key interventions. Just to mention one, we are driving environmental support, especially around our wildlife. We as NSC have taken a very big drive towards that, and we do have a charity trading event that happens every year at the exchange that raises funds for protection of our endangered species. And really, it's out of a very goodwill gesture that we are just not about money, but it's about also helping and building society. And that's why we're happy to embrace this. And I'm happy to continue this conversation as we go along. Thank you very much.
Thank you very much, all three of you. And just to frame the conversation, I mean, you'll agree with me that in the last year, the COVID-19 pandemic, not to dwell too much on it, but it has been a huge impact across the world, the most consequential global health, social and economic threats, and has caused major setbacks in so many economies in Africa, in every country under the surface of the on Earth. But my question is, can you just briefly share with me the impact in your markets and in your economies, and what are some of the post-recovery plans that should help us deliver the sustainable recovery in our economies? I'd like to start with you, Jeffrey.
So thank you very much again, Maria. So the COVID-19 pandemic, one was very unprecedented, just like all of us all know. And largely, it created sort of a very big surprise event, not only for us at the exchange, but also the country in general. And when we got our case zero, what we refer as case zero in March 13th, the first thing that happened was a lot of panic across the country. The market did go through a shock. We had to put the market on a suspension trading just to calm it down. There was an immediate formation of various committees by government, private sector, to sort of react to this very, very new event that nobody knew how to deal with. And so it led to almost an immediate transition into a lockdown environment, and we didn't know how to deal with a lockdown environment. Within a week or two, we were all given new protocols, new measures to adhere to, work at home policies, and all these new things. And so what that led to was that a lot of transition into a virtual environment was necessary. And we were happy that we had actually been investing onto BCP plans and a full automation environment over the years without really having a real disaster, what do you call that? A disaster recovery transition, or rather disaster recovery, what do you call it? A challenge. And so what happened is that we immediately moved into a virtual environment, put all our trading systems, our brokerage systems all into a virtual environment. Fortunately, these investments had all been put in place and we were all able to move out. It did have an immediate impact on trading. We saw a high level of capital outflow, especially from the international markets. We happen to have heavy international trading on our market, almost 70%. And that led to a sort of a drop in our performance of our indices, low turnovers. We lost almost 25% within 3 months in terms of valuation of our index and also our turnovers. And so it was still very unclear and how things would play out. But fortunately, as the health measures came in and as consistent information coming from our health ministry, and one thing that we've done very well in Kenya is to inform the public on a daily basis on how the COVID situation is. It became very monotonous, and guys would almost replicate what the minister would say. But I think with hindsight, we're now really happy. We know things around positivity rates, we know things around the vaccine rates, and etc. Like right now, we are in a sort of a partial lockdown, and everybody's actually looking at that positivity rate going down and knowing that it should go within the 5% World Health Organization requirements before we can open up. And so that's been a very key issue. Now, what also happened was that the government reacted very positively to the concerns and the challenges facing Kenyans. We had an immediate tax reductions. For instance, our corporate tax was reduced by 5% across the board, both for individual and corporates. We had the banks reducing the cash ratio from central bank, and hence the banks were also in a falling trend in reducing the loan, the cost of loans, heavy provisioning, restructuring of facilities, and all in an effort to provide an ease for businesses to continue operating. And so that was very, very helpful, and it led to some level of stability across the market. Of course, what was so helpful also was the whole transition to a digital operational basis. For instance, at the exchange, our trading members and our clients were all able now to trade through the digital platforms to access the market. We never had a shutdown at all. The markets continued to operate. We saw good local investor participation coming through, but I think it's because people were at home, and hence there was nothing much to do but to focus on what you could see, and hence the market being visible was helpful. A lot of pivoting of businesses to new models of operations, all focusing on digital platforms. In Kenya, we have a very high digital penetration. We have a very advanced mobile money platform. So everybody transited into that, and it was quite helpful. But it didn't come without challenges. I think all in all, the general state of the economy affected all the sectors. So our tourism sector, our manufacturing sector, and the companies listed on these sectors almost closed down. Kenya is a very tourism dependent country, so you can imagine the impact we've had in that particular sector. And so it's been very, very challenging. So in a nutshell, we have gone through different swings. We're currently riding another tide of a third wave. It's having equally bad challenges, but we're navigating. And so that's really just a brief experience we've gone through. Thank you.
Yeah, thank you very much, Jeffrey. I have a few questions for you, especially with how the tourism and manufacturing sectors have been supported to bounce back, and what is the plan? But I'll just move now to Shamila to give us the South African perspective. How has your markets been, and what are some of the post-recovery plans your government is putting in place to help South Africa bounce back? Shamila.
Thank you, Maria. So, there are many of our experiences, I think, that mirror what Jeffrey has so nicely set out. I think the slight difference in our context has been that the JSE actually did see an uptick in trading volume. So it's a fairly large market, and of course there's a lot of activity. Usually when there's uncertainty and there's volatility, you do see an increase in trading activity. So we were quite sensitive to the fact that from a volumes perspective, that was actually quite positive for the exchange. However, one needed to be sensitive to the fact that the broader ecosystem was not necessarily coping in the same fashion that the JSE did. We're very fortunate we never needed to close the markets. We did have our systems tested to the limit, often on the back of that volatility and the huge trading volumes, but I won't go into too much detail in terms of the impact on the exchange itself, but rather that ecosystem in which we operate, because Jeffrey's already outlined a lot of the market challenges, so I think the audience is more familiar with those now. So from the perspective of understanding that we operate in a broader ecosystem and environment, and what does that mean? The first one was for us to to reach out and to understand that, a number of our smaller brokers, for example, would have been experiencing hardships and things like that. Some of the smaller companies listed on the exchange would have had a difficulty that are falling in sort of the broader SME type of landscape. For those ones, we put in specific relief measures, which could have varied from in the broker side, the fees, to in the side of the companies themselves, looking at fee reductions. In some cases, even partnering with the SMEs that serve us, for example, that we're procuring from, to paying those SMEs, even if we weren't actually using their services, and reaching out and saying that we understand that, for example, small businesses would be unduly affected and disproportionately affected, considering the lockdown, because South Africa went into lockdown late March last year, and the hard lockdown was particularly harsh on small businesses. And so how do we do that? A number of them, thousands, have gone out of business. We also know that they're big employers, particularly in that segment of the economy that requires employment. And so how do we support them? So we did our bit in that regard in terms of reaching out to the SMEs that we directly impact. The second area that in which we tried to support the broader national narrative was that we took 2 full days of trading revenue across all our asset classes, across all our markets, and gave that to the President's Solidarity Fund. So the Solidarity Fund was set up in South Africa to help those most vulnerable, most marginalized, and would have had very direct and dire consequences as a result of COVID and the different effects of it. And so donating that trading revenue, what we also did was partner with a number of other actors in the ecosystem. So, the spirit of giving, I think, within South Africa is quite profound. And businesses, even that were struggling, still decided to partner with us and contribute. So in total, I think between the JSE and about 38 different partners in the ecosystem contributed to just under 35 million Rand to the Solidarity Fund. And in helping that. And that, of course, we then depend on the fund itself to get that out to areas that need it the most, which the exchange itself is not necessarily good at doing, but there are parts of the economy, parts of society and community that needed that. So that is another way in which we tried to reach out, partnering where we could, in making sure that our impact was broader than just ourselves. So there are a number of different initiatives that we did, broad market facing. Then if we look at the issuer function, for issuer regulation function, for example, many businesses were facing unprecedented challenges as a result of the pandemic. And so where we would normally, for example, put out maybe 12 to 15 guidance notes in a year, I think during the pandemic, we probably put out just under 30, if I'm not mistaken, sort of between 20 to 30 notes that just were directly tailored at helping the market understand its impact, understanding, for example, if companies were delayed in having to come out with their financials, and I guess working with that ecosystem to enable that a little bit more, giving relief where it was necessary, just using the function of the exchange itself. And then, of course, I've outlined to you what we did broadly. Then if we think about the economy more broadly, similar to the case in Kenya, which Jeffrey's outlined, of course, our tourism sector saw significant negative consequences. We're also quite a heavily tourist, reliant country in many instances, and of course, with the hard lockdown, that became difficult. We also had a very high infection rate as a country, so even inbound tourism up to now is largely hampered coming into South Africa because of the high infection rate. We do seem to have that quite under control now, fortunately. So hopefully that will pick up quite significantly soon. But it doesn't, of course, negate the effect that we've seen in the last year. So, personally, I also work very closely with 2 NGOs that are serving the kind of broader environmental sector and have seen the impact on that. Even our own ministry, looking at that's the Department of Environmental Affairs and Forestry, had been significantly concerned about the potential pending biodiversity crisis as a consequence of our government just not having enough to prop up the tourism sector. And a number of the national parks, for example, and suddenly you're finding, they become more susceptible to issues like poaching because, you might not have the security measures in place anymore to protect that wildlife, which effectively your tourism sector is dependent on. So we saw those challenges coming to bear. We saw government reaching out a lot more to private sector for support in many instances. And I think now a lot clearer acknowledgement that this needs to be a joint effort between private sector, public sector, and the NGOs, civil society, if we are to make good of the crisis. And there really have been devastating consequences. And so if we are to make good of that, there is a need for the three to partner together a lot better than we've done in the past. One thing I think, which is probably not new to anybody on the call, is the whole notion that the historical underinvestment in sustainability is why we saw the need for the massive stimulus we saw on the back of COVID. And that is global stimulus. But then what are we doing with that money? And how are we trying to direct that money to more sustainable outcomes and not perpetuate the mistakes of the past that that it basically ended up in us having to spend huge amounts of money to deal with deficits that shouldn't have existed in the first place. And even if you're thinking about things like poverty alleviation and the like, many of those deficiencies have come across because of historical underspending, including in the healthcare system, in reaching the people that are the most vulnerable. So I think a lot of that has become a lot more obvious. The positives for me is that I've seen, from the businesses I've engaged with, a lot more awareness of that at the very least. So my sense would be, I would hope that we're going to see that translate into tangible action, into a lot more understanding and action around the notion of shared value, and that businesses really need to earn that social license to operate.
Thank you very much, Shamila. And Tinuade, over to you. In our case in Nigeria, in the last year, as a result of the COVID-19 pandemic, the government has put in place so many fiscal and monetary initiatives to help cushion the effect of the COVID-19 on businesses. But how is that panning out in your own opinion? How would you say that has really moved the needle towards bringing sustainable recovery to businesses in Nigeria, and how has that impacted the market? Chinode, can you hear me? You're on
Yes,
mute.
hi.
Okay.
Yes, I said I should apologize that my video is not on. My network is a bit unstable, and I find that when I switch off the video, it gets better. So thank you very much for the question. So let me start from a little bit from how the Nigerian Stock Exchange, as it was before demutualization, viewed this whole matter, and then segue from there into some of the issues that you asked about. So I think, like Jeffrey has said and Shamila has said, the market, what happened with us was broadly similar. And so, we had the index case in Nigeria at the end of February, and based on our own risk management matrices at the exchange, we had been tracking before, since markets are global, we had been tracking, what would happen if we had the index case and then, it spread the way that it would normally spread. And so round about the third week in March, we took the view, based on our own risk management review, that we were going to temporarily start trading only remotely. So we had a trading floor, and we decided that we were going to start trading only remotely. And we're still working from home now. We didn't ever have to shut down the trading, thankfully. I think that the measures that we had in place and previously ensured that the market was robust enough, that we had enough resilience to be able to continue trading without having to suspend or have a shutdown. However, as a market, we were very, very interested in our ecosystem. So we felt that, we had the technology, first-in-class technology, because we trade electronically. But we were very concerned about our ecosystem, because the market is only as strong as the ecosystem. And so because we also have a regulatory remit, one of the things that we did was we said, how can we help the ecosystem here? And so immediately we saw that companies that were due, the majority of the large number of our listed companies have a 31 December year end, and their results are due by the 30th, 31st, by the end of March. And so we knew that given what had happened and the shutdown that followed at the end of March, a lot of them were not going to be able to submit their results on time. So in collaboration with other stakeholders, such as the Securities and Exchange Commission, the Corporate Affairs Commission, we did regulatory forbearance. We worked very strongly with stakeholders such as the Corporate Affairs Commission to have those discussions that led to the Corporate Affairs Commission issuing the virtual AGM. Their
Can everyone hear me? Is it? Tinoda, I think we've lost you.
We can hear you, but I think we lost Tinoda's audio.
Okay.
Our normal online trading facilities were able to get onto those facilities and continue to trade, and just ensured that we kept in touch with the community and ensured that we were helpful to the community all around. The results in the market, like they did, I think Jeffrey's spoken about this, the market did take a hit, but eventually later in the year, the market rebounded, and indeed of a number of markets, 93 markets, global equity indices that Bloomberg tracked. You may know that our all-share index actually did the best in the world, coming up 50.03% from what it had done before. So for us as an exchange, it was a good year, but we were very conscious of the ecosystem, and we rolled out things like masks for all. We contributed through the capital markets for initiative that was headed by the Securities and Exchange Commission to ensure that we were involved in contributing to all the contributing to solve some of the healthcare related problems, helped to buy an ambulance and that kind of thing in order to just play our role as a responsible citizen. Now, a lot of the companies that are listed on the exchange wouldn't necessarily be recipients of some of the initiatives that the government put in place, such as initiatives around households that had certain certain level of income and direct interventions with capital in those households. I think that there were also initiatives around duties for certain types of industries and that kind of thing. But the exchange ecosystem, its listed companies, didn't necessarily qualify for some of those initiatives. And so I think the way that we have looked at it is that because of that, the private sector itself has to stand up. And I think Shamila has talked about it. There has to be a move from the private sector to help itself. And I think that is happening. We're seeing it around the promotion, the inclusion that the private sector itself is fostering. We're seeing it around programs like this, where there's more conversation about what can we do to help one another? What can we do to ensure that growth is more inclusive? What can we do to ensure that in the sectors that are particularly touched, that there is activity in those sectors? So with respect to ensuring that we take, as Shamila said, that we take hold from here. So it's not just that this happened and woe is us, all of these things happen to us. How do we grow from here to be able to use all of what happened as a springboard to, post-recovery, to being able to do things and be better prepared, just generally. So I think one of the things that we've done is we're doing capacity building with the collaboration of the Global Reporting Initiative to ensure that there is better delineation of sustainability issues in the reporting that companies have, so that companies themselves focus on sustainability, but also that investors who are interested in investing in them have the tools based on the reporting that they do to decide between one company and the other who it is that they would like to invest in. We're also very active in the gender representation area. So we're working with the IFC on developing with something called the Nigeria to Equal program. And in the context of post-COVID, it's particularly important that we have gender representation and, working with them to build capacity in that area. We've also done some thought leadership initiatives. So one of them was around governance. How do you govern in this virtual environment? And also working right now on a
a draft around green bonds for the Nigerian market. And when I say a draft, it's a guidance that helps you to navigate in the Nigerian market if you wanted to issue green bonds. Because we think that one of the problems is that it's not as easy to get information if you want to chart a sustainability path as it is to get information if you wanted to raise, for example, ordinary bonds. So just getting all that information together so that people have one-stop shop to be able to navigate the issues. Thank you very much.
Thank you very much. Thank you, all three of you. I like the fact that you mentioned, the private sector in your conversation and looking at more broadly the ecosystem outside the market. So if we're going to talk about achieving sustainable recovery for Africa, there are also many key stakeholders, so many individuals that we must engage who will be playing very important role. You also talked about policy, and you know that government can use policy to drive capital towards sectors that needs to be developed, our priority sectors. We need regulations. We need also the capital market and also institutional investors who are highly regulated, the sovereign wealth funds, the insurance, and even pensions, highly regulated, and many of them are not able to invest in some kind of asset classes. We also have development financial institutions and also development partners who also have to be bring their hands on deck towards helping or leading Africa towards a sustainable recovery. So I'd like to ask Shamila. Shamila, what is the role of institutional investors, DFIs, and other development partners in helping Africa achieve sustainable development for the continent?
Thank you, Maria. So, you've mentioned a number of factors in relation to the different actors that make up, the investor community. So the first thing I think is the explicit recognition that they do need to work together, and there has to be some common driving purpose. And yes, policy plays a massive role in that. If I take the South African example, when we have a level of policy certainty, it's easier for the investment to follow and, for example, the projects to be set up. Now, I'm going to reflect on some of the challenges that I've seen recently being involved both in local and global dialogues in relation to that, and particularly those that are looking at the continent of Africa and looking at the different countries. The biggest obstacle often seems to be is that people are saying there's money to invest, but we don't have the projects, we don't have the bankable projects. So if we need to double click on that and disaggregate at a national level at the different levels in the country, what does that mean in terms of having that pipeline? And the reason I'm bringing this up is because that matters to investors across the board. They want to have bankable projects to invest in. So they're saying the money is there, but they're saying the projects are lacking. Then when you dig a little bit deeper, people are saying, well, we don't necessarily know how to set up the right projects. What are these investors looking for? What makes it more bankable? And for example, in relation to sustainability in particular, and here I'm going to use the particular lens of the SDGs, many of those projects are not necessarily going to give you market-related returns. So then there's the delineation of which investors. So let's go back to the investor ecosystem and understand their needs. And then again, bringing in the institutions that you've mentioned, the role to play, for example, with your DFIs and the like, would be to understand how to bring in different types of capital, how to blend the different levels of finance in order to make those projects more bankable and feasible for investment, and then help to unlock the pipeline. Then once you have the frameworks in place for governments that help to unlock, for example, institutional capital to be able to invest in that, it allows for the money to move, to reallocate money to be able to promote more sustainable development and do that in a way that is meaningful and impactful ultimately to society, so we can see that benefit. So even if we think about that money from institutional lens, what is that money trying to buy? Is that predominantly our retirement funds? Effectively, it's you and I. That's our money. That's our pension money that's being invested. So the role then again is to go one level deeper and to ask the trustees and those investors, and actually ultimately you and I, how much are we pushing for that to happen and for that change to happen, and to inform ourselves about what we can do within that ecosystem, what we can do to ask our asset manager, so where is that money invested? Are you using a responsible investment lens or a sustainability lens? Tell us how you're trying to move that money. That will then spur more conversations in that ecosystem to start wanting more product to be created, then the likes of Jeffrey, Tanwani, and I will understand, okay, well, fine, we're seeing the demand. Now we know when we build these platforms, we understand what it is we're aiming to support. And then our ecosystem or our infrastructure services help to then stimulate that broader investment that is required. So, again, I'm pointing to the need for the different actors to understand their roles in that. The need for certainty on policy in some instances. If I take South Africa, for example, we're a fossil fuel dependent economy, 95% of our energy comes from one utility. And so if we, for example, are going to meet the transition to a low carbon economy, the decarbonization is a critical aspect of the agenda. But that conversation can't be had without the context of a just transition, considering the number of jobs that are tied into the fossil-based sector, into coal, for example. And so you can't do that alone. The business community, in terms of the real economy, needs to engage. Policy then needs to support that transition in a way that gives a level of certainty. And of course, in many instances, where also takers are foreign direct investment. So are we understanding what those investors are asking for? And are we then gearing up to be able to make sure that we meet some of those requirements? But I think even more importantly, are we gearing up to influence those conversations so we influence those requirements? And so the understanding of the context of our different countries, of our different energy mixes, of our different poverty issues, concerns with unemployment, for example, are given due recognition in those frameworks that are going to have extraterritorial implications on our economies. So Maria, I think that the question is really multifaceted, and I'm hopefully given an indication of the different actors that need to work together. And on top of that, we've had a year where we've seen huge economic contraction. So it's even more important that the little money that we do have is really focused differently in terms of the way it's allocated. And there's an explicit consideration of sustainability and the long-term sustainability of our economies on themselves. So moving away from sustainability just using the environmental and social lens, which we typically refer to, but to say just the sustainability of those economies who need to operate in a rapidly changing global context. And in many instances, if we want to make the free trade agreement work on our continent, how do we bolster that? How do we make that in a way that it works for us, but also gives us the whole world as potentially, a market to sell our products into, for example? And we can't do that without being cognizant. So I don't think it's an easy question, but I think that the explicit consideration of governments of what that means in the enabling frameworks and the incentives is important. Secondly, for businesses to understand that if we don't fundamentally rethink our models, that those models are going to be short-lived is the second one. And so how do we create for a more sustainable economy? How do we bring in concepts of circularity and circular economy? I just can't remember the name now, but on the chat, we've had somebody who's talked to about not giving due cognizance to the ecosystem perspective and understanding that we're operating within an ecosystem that has limits. So while our short-term profit focus is what has dominated up to now, that ecosystem on which we depend on to derive our existence actually is starting to fail. And so those issues need to be brought to bear. Governments certainly need to have a stronger role to play in relation to regulation. I don't know if you saw recently the ex-chief investment officer of BlackRock, and BlackRock has often been widely cited in sustainable investment. The ex-chief investment officer said that, if we're not looking at stronger regulation coming from government, expecting private sector alone and the market mechanisms to move is going to take too long.
Beautifully put, Shamila. I'll come to Jeffrey. Jeffrey, what's your own perspective? What's the role of government, and how is it in, let's look at a case study in Kenya. Can you speak to what you're doing in terms of sustainable recovery in Kenya?
I want to agree with the previous speakers, especially around really looking at it from an ecosystem perspective. I think what COVID has done to the whole world is to realize that for us to grow our country, we have to use our resources. We have to look inward and not necessarily outward. What has happened over the years, especially if you look at the pension schemes in most of African countries, they've been very commercially focused. They're more return focused. They look at short-term returns. That's been more of their perspective. But what has come out now is that when a situation like this presents itself again, you really have to, everybody recedes to their own territories. And hence, there's need for people to work together. Now, what has happened in Kenya, for instance, let me just speak to what has happened on the pension side. there's been the formation of what we call the Kenya Pension Infrastructure Forum or Infrastructure Project Team. And basically what it does, it aggregates the large schemes to look at project financing in support of government. So as opposed to working alone as a standalone scheme, now you're looking at how do you aggregate your resources and support certain projects. And that's been very, very helpful. There's also a big drive towards supporting sustainable projects. Kenya happens to be a very green, highly potential country. We have a lot of geothermal power. We have hydropower. We have very many green financing opportunities. And during, in 2020, just before COVID, we were able to list the first private sector green bond in our country. And it was actually a dual listing with the London Stock Exchange. So that realization is coming through. Institutions, even manufacturing companies are moving and changing their models to really come up with other services. For instance, we have people who previously were purely in steel manufacturing, but they're looking at how can they also produce oxygen. So there's that change that you have to not really center yourself to your core business, but look at other services that help society and sustainability. So that's become very, very critical. Now, from a national level, there's a very big agenda towards driving a sustainable agenda, where the government has actually come up with dedicated policies towards supporting that. For instance, around the green bond, we formed something called the Kenyan Green Bond Program that's under the patron of the central bank. And that program is aimed at identifying green bond opportunities and also coming up with financing mechanism for these green bond opportunities in various sectors. So it's very multifaceted, brings together players from every sector, and we're really looking at how can we then create a very low carbon environment and really help utilize this positive positive energy, positive aspects to really drive the economy. So that's been sort of now cascaded down to various sectors, right to the ministries. And we even have now a project where we are trying to come up with the first sovereign green bond under the National Treasury that again is going to support all the government infrastructure projects with the green wrapping around it. So there's that criticality. The other point that I wanted to mention about is the risk of rising debt levels. Now, when during the COVID time, then you then tend to attract all this funding that's coming to support us for health programs. You mentioned about the institutional funds and the DFIs and all this international funding coming. But what's happening in the long process? The debt levels are rising, and hence the strains begin to creep in. We are going through that currently, a very high debt level, and now we're actually getting IMF support, and they come with very tough conditions, and so there's need for then an inward look at how can we then rebalance all this and see how we can sort of navigate through these very difficult times. One of the things that I did see helping a lot whenever we faced a crisis like what happened in 2008 when we had the global financial crisis was when the state was able to dispose of some of their very good state-owned enterprises into the market and raise capital to support their funding programs. In the process, they were able to then adjust some of the key macro parameters, the interest rates, the cost of funds, the cash ratio, and in the process reduce the cost of funding to the general public. So there is need for governments to really be look at how the business model operate, work with the private sector. Public-private sector partnerships are the way to go. There's a lot of money looking for matching funds, and hence that becomes a necessity. So my view is that sustainability is going to be a key imperative, not only for the corporate institutions, but also for the government to really adapt onto that. Thank you.
Yeah, I'd just like to let members of the audience know that they can ask questions. You can raise your hands and we'll give you the opportunity to ask questions. So staying on the note of debt profiling, and Tinuade, you know that our own debt profile in Nigeria is at the highest I think I read it's like the highest in 30 years. I'm not sure. So, but is borrowing the way out of this pandemic for Africa? Is borrowing the way out for us? It's quite worrying that our governments are borrowing from every source possible, from the capital market, from IMF and the World Bank. But is that the way out of the pandemic?
Well, actually, there's nothing wrong as a general rule with borrowing.
Okay.
Borrowing is, I think in many countries, borrowing it's almost like a swear word that people don't like to hear about. But you can grow an economy through equity, you can grow it through debt. The question is, what are you borrowing for? What are the conditions of borrowing? How does your borrowing relate to your ability to source revenue? And I think the people that have concerns about the significant borrowing that is going along all over Africa, it's those kinds of issues that they really should be focusing on. So in my opinion, there's nothing wrong with borrowing. And, I think as somebody who is a representative of an exchange group, of course, bonds are a form of borrowing. But it's those issues I think that we need to look at. What is the borrowing for? And what is the source of repayment? And are you potentially borrowing in such a way that you are jeopardizing the future of several generations? Those are some of the issues that we're talking about that I think are of great concern. Now, if you're borrowing for infrastructure, of which Africa has a significant deficit, what type of infrastructure? Is it productive infrastructure? And are you taking advantage of the kind of borrowing that would also allow you to spread the risk, and the kind of borrowing that will allow you to leverage over time? So I think that the question is not as simple as should we borrow? Yes, we should borrow. But we should be careful about the type of borrowing that we're doing. And I think that there are also types of borrowing that can be sustainably used. So for example, the government itself, the government of Nigeria, borrowed via a green bond about 3 or 4 years ago, the first sovereign green bond that the government of Nigeria entered into, and borrowed for specific projects that could be environmentally sustainable and pass the green bond principles. So that type of borrowing is not a problem. The government has also looked at borrowing via sukuks, which again, from a social point of view, again, that type of borrowing is linked to all the, requirements that you have to be classified as a sukuk bond. And there are things that are built for inclusion. Those kinds of bonds have certain features that make them, whether it's environmentally or socially acceptable. So I think that those are the kinds of areas that you want to look at to ensure that you're not going on a frolic that will eventually hurt several generations unborn, especially in a country like Nigeria, where we've had, we made a big deal about debt forgiveness a couple of years ago, and we're back to borrowing. And I think we have to look at our entire structure. There are these policy somersaults back and forth. And really, those of us in the different ecosystems where we're saying that we now have to have inclusive conversations, have to hold the responsible people's feet to fire and say, what are you doing? Be more inclusive, have the appropriate sorts of conversations, have the appropriate people at the table, and call out when we feel that these things are not being done. Thank you.
Thank you very much, Chinua. I hear that borrowing is not the issue, is what we borrow for. That is the problem. We have a question in the chat. I'll read it out and maybe give either three of you the opportunity to respond to, and very important, and that's my feel. It's about impact investing. What about the role of impact investing and social entrepreneurship in agriculture? I didn't hear agriculture being mentioned yet. While both economically and nutritionally, I think it's jumped now. A vast majority of the people are directly dependent on agriculture. So who would like to take that question? Shamila, would you like to attempt on the role of impact investments and social entrepreneurship in agriculture?
So, Maria, I can't claim to be an expert of the role of social entrepreneurship in agriculture, but from what I know, because we also obviously operate in our commodities market, which of course, directly talks to agriculture as well. So let me start with that end and just say that, and again, qualify, I'm not an expert on that, but I will try. We definitely can see that social entrepreneurship is going to have a bigger and bigger role to play if you use the sustainability lens, and I'll bring it back to that. When we're looking at things like responsible farming, when we're looking at saying that, if we continue with many of the practices that have been dominant up to now, we're effectively depleting our soils. And again, to that ecosystem view of that, we're effectively, destroying that very ecosystem on which we depend. And this is a long debate that goes to chemicals and, all of those sorts of things and the use in what we produce our food. Social entrepreneurship in that regard, I think, is going to have a particularly important role to play, because as it stands, your commercial farmers are probably by and large hesitant to look at more responsible farming because we're driven by yield. And right now, that model is dominated by using certain chemicals and pesticides to drive that yield. And we understand that that model fundamentally is impactful on their business. So if I look at it from a sustainability lens, the social entrepreneurship angle is going to be more akin to reviving responsible farming, to be going back to understanding the nature of soils and our dependence on that, and then taking it into an ecosystems perspective of looking at those soils, for example, as carbon sinks and the roles that they play, which ultimately affects us all. It affects society as a whole around the globe. And so that angle, in terms of saying, well, how do we start that up? Social entrepreneurship is going to have a massive role to play, because unfortunately, I don't know that it's going to be led or that by the commercial farmers as they stand right now. And so that could be where I see that angle particularly. So I'm just going to leave it at that for now, because it's an angle that I can see quite clearly from a sustainability perspective. Then on the second question on the role of impact investing. So impact investing, to my mind, it depends on how you think about this and how you look at it. If you're seeing it as a completely different class of investment, then there's a particular lens which you consider. I prefer to think about it as simply looking at the returns of the return expectation spectrum. So there are those who are going to be looking at wanting to have social and environmental return, and that by definition is looking at impact and quantifying that in social and environmental terms. And that traditional investment or in lending, for example, doesn't necessarily look at that. So investment and impact investment to me is concerning itself more with outcome, and then that's the one element of it. Within that, then, is the spectrum of the return expectation. So to what extent are they seeing that there is necessarily, and it doesn't have to be, a trade-off between outcome and impact and financial return? And where on the spectrum do they want to see that? That brings in different types of financing, and certain types of projects, certain types of investment are by nature going to yield lower return, and that's where those investors who are happy to take a slightly lower return for a bigger impact are critical. And then I'll take it back to my point earlier about potentially how one scales that up. If you look at things that looking at blended finance, for example, where we can bring in that, we can crowd it, and we can seriously impact, and we can seriously scale it up. The challenge that impact investing in its traditional sense right now is facing is the ability to scale. And so how do we do that using the mechanisms and the models that we have? So hopefully that's a little bit helpful, but in understanding what impact is and how do you want to achieve that, and what is your expectation in terms of a trade-off with financial return, and then placing that on your spectrum and being able to then direct your financing appropriately to those projects. So let me leave it at that for now, Maria.
Thank you very much, Shamila, for that great attention. Jeffrey, I see you want to say something.
Yes, I'd like to make an attempt as well. So I do definitely see a case for impact investing in agriculture. Agriculture happens to be a mainstay of many economies in Africa, but as Shamila has said, is how are we doing it? Where can we add value? So I see it as having it as a very targeted approach. So two areas that I think are very important for impact investing in agriculture: one, in value addition. Now, a lot of our farmers are basically just producing for export, producing the raw materials for export, yet there's a lot that we can do in terms of value addition and hence enhance the value of the crop. The second area that I see value, rather an impact, is on post-harvest losses. Now, there's a lot of post-harvest losses taking place because of lack of infrastructure, be they the infrastructure to keep our produce, the warehouses and all this. And I think this is an area that social investors should look at. Social impact investors should look at how they can help in agriculture. The other area is around aggregation of land. Now, there's a big fragmentation of land, especially in most of our countries, but there's need for us to aggregate land to provide better economic value of land and economies of scale. And that's another area in terms that we impact on the people and hence make agriculture a mainstay of all our economies as it has always been.
Thank you very much for those 3 points. I have one more question. Do I have time to just, yeah, great. It's very important as it talks about the strategic long-term recovery to scale Africa's impact. It's a long question. I'll try to attempt to read it. I'm certain there are short-term measures to navigate the COVID-19 crisis, but how would we be more keen on strategies that bring long-term recovery? So I'd like to ask Tinuade or anyone to respond to that. How do we bring long-term recovery to scale Africa's impact, especially in the time of this crisis?
Okay, I think. All right, so I'll just attempt a short answer to a long-term question. So I think that one of the things that we have to do is something that we've spoken about repeatedly during this panel, which is collaboration around certain issues. And so if you want to see long-term impact in certain areas, choosing what those areas are. So there are a number of areas that are very obvious that during the pandemic, you know, the belly, the nasty underbelly became very, very obvious to us. Healthcare is one of them. That our healthcare systems clearly, if we had like a real third or fourth wave, and we had the kind of intensity that we had towards the last quarter of last year and the first quarter of this year, when we recorded significant numbers and a number of deaths, higher numbers of deaths. If we had that again, how will our healthcare system cope with it? And so one area that I think there should be a long-term look, and investing in that area should be in healthcare. And it's the whole gamut from primary healthcare to the teaching hospitals. We can't be building, recovery centers in the middle of a pandemic. We can't have situations where some states don't even have anything, and all the politics gets in while you're really trying to face a pandemic. Depends on which party you're in and whether they're trying to black label the state and all of those kinds of things that we saw during the pandemic. So taking a long-term view from now, and across board, the regulators in that sector, the government in looking at that sector, and whether it's things like the using import stimuluses, whether it's things around duty, whether it's things around giving tax breaks to people that want to really invest in that sector, a long-term view around there. I also think agriculture, which we've spoken about, is very, very important. We need to be able to feed ourselves, but not only feed ourselves. I think Geoffrey made the point about how there's so much post-harvest waste. It's almost criminal, the amount of post-harvest waste that we have. And I think we need to look in that area. We also need to look, in my view, in the agricultural area on machinery. So, machinery that helps in post-harvest processing, machinery that helps you with sustainable types of farming practices, and machinery that just helps with the infrastructure. And if I can put in a plug for the capital markets, as you're developing the commodities exchange space, you need the back end for that space. And we have about 2 commodities exchanges now, and some of you may know that the Sovereign Wealth Fund has actually invested in one of them, the Abuja one. So
what's the ecosystem to support that? Do we have the warehouses to support that? Do we have, are we hooked up to the standard measures across the world that, will grade our own cashew, the way cashew is graded in the international markets and things like that? Those are areas we can invest in. And because we have a comparative advantage, directing funding, either the government funding strategically into those areas or encouraging entrepreneurs that are interested in investing in those areas in a sustainable manner, I think is another thing that can be done. I think we also have to build capacity. I think, we've seen, especially what a number of the younger people, I'm over 50 now, so I can talk about people being younger people, have done in the technology space and the attention that a number of them have gotten from financing outside Africa, outside Nigeria. Is there a way that we can harness that and make some of that, divert it locally as well and be attractive to them, have a conversation with them? There seems to be a lot of policy flip-flopping in that area. Especially around the discomfort around some of the practices and some of the things that are needed. But we need to have a conversation because those things are not going away, and having them as part of the conversation in a sustainable manner. Thank you.
Thank you very much, Tinuade. Ladies and gentlemen, we have been on this Fire Chat conversation on is sustainable recovery a pipe dream or a reality? Private sector responsibility in financing and sustainable recovery. I'd like to give the panelists 1 minute to have their closing remarks. And I'd like to start with the man first. Jeffrey, your last thoughts as we close.
Thank you. I want to just respond to your last question. I think the future of the long-term recovery of Africa out of this post-COVID recovery will be about inter-Africa trade. How are we going to take advantage of the African Continental Free Trade Area agreements and all the regional agreements we have to trade more with each other? And that's going to help us build our industry, use our comparative advantages, and hence make Africa very insulated from these shocks. Because what has come out is that when situations like this do come up, everybody recedes back home. And we've got to protect Africa and make Africa sort of strengthened to avoid the next Black Swan event occurring and catching us by surprise again. Thank you.
Thank you. Shamila.
Very quickly, Maria, we need a plan and we need it fast. And we have to move from talking about our potential to realizing it very, very quickly. And so for me, it's that action now. I think there's lots of plans there. Crystallize that and move fast on it. I think our window of opportunity is closing, but at least we have that window. So thank you.
We need a plan and we need to move fast. Thank you very much, Shamilia. And finally, Tinuade, your last word, please.
I think this is a perfect example of never let a good pandemic go to waste. And so the pandemic has thrown up a lot of things. We need to take advantage of the issues that have come out of the pandemic, grab them, harness them while people are still interested, while people still have the memory of what happened, and push that memory into passion to get something done collectively. Events like this are good. So the communique from an event like this, the relationships that people build at event like this, how do they translate them into action? Because the time has come to stop talking and just act. Thank you.
Thank you very much. Harnessing the opportunity from the COVID-19 pandemic and translating them into action. I'd like to thank you, audience, for being such a wonderful audience, and I thank all the panelists for their contribution. We have so much to say, but we have to end now. At this juncture, I'd like to hand over to Oreva Atania to take over the conversation. Thank you very much, Oreva.
Thank you very much, Maria. Thank you, Geoffrey. Thank you, Shamila. Thank you, Tinuade. Very important issues, and thank you for I think we covered so much in such little time. I'm really, really glad. Thank you very much. And I'm glad that we went to the conversation of food. It's very, very important. So we're going to another very important conversation now, which is gender parity. So we want to recover, we want to do all these great things, we want to make Africa resilient. We can't do that with half of our population being excluded. So our next session, I'll be inviting Naomi Nwonkolo, who's the Executive Director of the UN Global Compact, to present a brief case of best practice. What should we be doing? How should we be including the female gender and everybody who may be excluded in our recovery plan? And then we'll go into the full panel discussion. But thank you very much, Geoffrey. Thank you, Maria. Thank you, Tinuade again. And thank you, Shamila. Naomi, I will stop sharing now. Okay, just a minute. Naomi's getting set up here.
Hello, everyone. Thank you, Oreva. So let me just proceed to share my screen now.
And if we can have your camera on as well, so our participants can see you.
Hello, everyone.
Hello, let me say on behalf of everybody, hi, Naomi, welcome. All right, let's put in slideshow.
Yeah. Okay. Yeah, so you're welcome to this session on the case presentation on gender parity in the workplace. My name is Naomi Nwonkolo. I am the Executive Director of the UN Global Compact Network Nigeria, and I'm happy to be a part of this session. So let's start with the status of gender equality in Africa. So if you look at the slide here, you can see that Africa is indeed topping the chart, above the global average when it comes to female representation in the board and executive committee level. But despite this, the women in the African continent still find themselves uniquely dispossessed in the workplace and unable to enjoy the same status of pay, employment status, protections, and leadership that men enjoy. Now, and in this chart, you can see that this is even more apparent when you look at the gender pay gap. You can see that we did a case study of about 5 African countries. Morocco, you can see there's 278% difference between the gender pay gap between the man and a woman. Same thing with Tunisia, there's 271%. Nigeria has 54%, which shows that men earn an average of over $204 above women with the same employment status in the company. In Ghana, there's 42% difference, and in Tanzania, there's 39% difference. So these figures here highlight how not only that women in similar positions as men for seniority and skill levels are still paid less, but also that income disparities are larger than wage gaps. And the difference here is due partially to the fact that women encounter challenges to get to senior roles or to be employed in high reward segments of the economy. An interesting part of this story is that women are less likely than men to obtain revenues from non-employment activities, such as financial investment or entrepreneurship, where financial gains are substantially higher. So now let's look at the barriers to gender equality in Africa, or you could also call them the challenges. So as discussed, we know that as discussed in the previous slide, we have seen that Africa is indeed topping the chart when it comes to women's representation in top leadership, but we are still lacking behind when it comes to equal economic opportunities for women in the workplace. So we've identified 4 barriers to challenges to gender equality in the workplace. And the first one we'll discuss is difficulties moving from the informal to formal sector. Statistics have shown that women in Africa disproportionately occupy the informal sector. And although women entrepreneurship across Africa is high, with Ghana being the highest, with 46% of entrepreneurs being women, women business owners are more likely to be in the informal sector rather than the formal economy, where wages and worker protections are higher. And the difficulty can mostly be attributed to issues around the fact that jobs that are historically and predominantly occupied by women are not formally recognized, as well as the lack of equal access to capital. For example, say investments, business loans, and others that will help female business owners to scale up their businesses and move them to the formal sector. Secondly is the issue of unconscious bias. Having few women decision makers entrenches biases that shows up in the way women are compensated and treated in their workplace. And in addition to that, the way women's accomplishments are viewed and the stereotypes and biases around women's strength in the workplace often leave a way of sidelining women employees and keeping them in administrative and low-paying positions. For example, in Africa, over 60% of women on executive committees have staff rather than line up roles in functions where succession and promotion to CEO typically come from. And these staff roles can focus on support functions, for example, human resources. And you know that these really have less influence on the strategic direction of companies, including their efforts to further gender equality. And when it comes to unconscious bias, it's important for us to also note that these biases are not just limited to men. Women also hold unconscious biases that result in us limiting our own prospects, makes us reluctant to take risks, network with our colleagues, and also advocate for our own advancement. Now let's look at the issue of lack of flexible working options. The issue of lack of flexible working options. Prior to COVID, COVID made working options very easy because we had no option than to stay at home and work. But prior to COVID, a significant number of workspaces do not account for needs that are specific to women. For instance, say providing flexible working arrangements and spaces for nursing mothers and women who bear the responsibility of taking care of family and domestic labor. And why is this so? The truth is companies are typically attuned to male needs because of deep-seated societal and cultural expectations that men be the primary workers and women be primary caregivers, regardless of whether they have full-time employment or not. For example, when the survey was conducted among the United Nations Global Compact members in Africa, 17% of African companies in the UN Global Compact offer flexible working options for employees, while 18% have parental leave, maternity, which includes maternity or paternity leave. Lastly is the unsafe work environment. For the first time in 2020, the International Labour Organization made sexual harassment in the world of work as an international treaty. This shows you that it's very important for companies to begin to protect women in these areas. So besides unconscious bias, women face overt discrimination also and harassment, in certain cases violence, when working in male-dominated industries, such as we could think of mining, extractives, construction, IT, and STEM. So these are other industries where women are disproportionately at personal risk or even disincentivized to join, lead to lack of women occupying these spaces and positions. And most of the time, they are really high-paying industries. So why businesses feel that domestic and home life is not an area where they should be involved? Issues of gender-based violence and domestic violence are overwhelmingly high, where you find a case of about 1 to 3 women being facing issues of domestic violence, which was really on the increase at the outbreak of COVID. So it is also important for businesses to begin to look at the impact of gender-based violence, domestic violence for their staff, because when women suffer the issues of domestic violence at work, they are at home. They will also not be able to function. And this will prevent women from really growing in their informal sector and helping them harness their full potential as well. So now we have identified the 4 areas of barriers when it comes to gender equality in the workplace. And it is true what they say, if you identify the issues, you think about the solution and how to solve it and make this happen. So now at the 2020 UN General Assembly, the Secretary General of the UN stated that no country is on track towards attaining the SDGs towards the road to 2030, and especially when it comes to gender equality. So the stakes are high right now for all of us, for businesses in the continent, to begin to take actions to solve gender equality in the workplace. So at this point, I would like to introduce to you the Women Empowerment Principles. So the Women Empowerment Principles are a set of 7 principles established by United Nations Global Compact and UN Women to help businesses to help women in the workplace, the marketplace, and the community. They provide a holistic approach for businesses to see the impact of gender equality in their business and also take actions to bridge this inequality gap. So from here, you can see the 7 principles includes high-level corporate leadership, treat all women fairly at work without discrimination, health, safety, and freedom from violence, which is principle 3, education and training for gender equality, enterprise development, supply chain, and marketing practices. So when you talk about gender equality, we're not really just focusing on your current business sphere. How are you ensuring that there's gender equality and women are also being protected in your supply chain and also your marketing practices? 6 is community initiatives and advocacy. How are you taking action in your CSR duties to ensure that women are protected in the community as well, not just limited to your workplace? And finally, transparency, measuring, and reporting. We all know the importance of sustainability reporting. And when you're reporting, it is important to include gender, because gender equality is a human right. And 92 targets of the Sustainable Development Goals are tied to human rights. So why not just amplify gender equality in your business and also report on them when you're making your annual sustainability report? So we've talked about the Women Empowerment Principles, but the truth is, we're celebrating 10 years of Women Empowerment Principles, but most businesses in Africa do not know about it or have not even taken steps to sign the CEO Statement of Commitment. So how do you go about this? If you're new in the gender equality space, there's nothing wrong with that. The best way to start is to start. So you can actually take actions as your take home from this session. But how do you go about it? So at this point, ladies and gentlemen, I would like to introduce to you the Women Empowerment Principles Gender Gap Analysis tool that will help businesses to begin to take actions and see the lapses of where they have lapses as regards gender equality in the workplace. So please lend me your ears while I play this short video. Thank you. Investing.
Advancing sustainable development. If women and men participated equally, the world economy could gain $28 trillion by 2025. The research is clear. Gender equality is an enormous opportunity for businesses to improve their own performance. Companies with at least one woman in senior management tend to see significantly higher annual performance. By closing gender gaps, companies benefit through increased productivity and higher retention. Investors are increasingly looking at the gender equality performance of companies as an indicator for potential growth. Beyond advancing gender equality and women's empowerment internally, companies can impact all areas of society and be a leader in creating lasting, positive change. Despite this opportunity, many social, economic, and legal barriers for women still exist, preventing them from entering the workforce, progressing in their careers, and growing their businesses. In fact, at the current rate of change, it will take more than 100 years to achieve gender equality. So how can your company accelerate the pace of change? Introducing the WEPS Gender Gap Analysis Tool. It's a self-assessment tool that improves your company's ability to assess current gender equality policies and programs and identify gaps and opportunities for improvement. The WEPS tool is based on the Women's Empowerment Principles, a holistic guidance to businesses on empowering women everywhere, in the workplace, marketplace, and community. More than 190 companies worldwide contributed to its design process. The WEP's Gender Gap Analysis tool allows companies everywhere to understand best practices, existing resources, and international standards, driving gender inclusiveness and women's empowerment. The WEP's tool is free, user-friendly, and strictly confidential. By using the WEP's Gender Gap Analysis tool, your company can assess its strategic approach to gender equality, identify gaps and opportunities for continuous improvement, learn global gender equality best practices, benchmark against peers and industry standards, contribute to the Sustainable Development Goals of the United Nations, and turn the global goals into local business. Are you ready to lead the change? Don't get left behind. Start your assessment today. Visit www.weps-gapanalysis.org to access the WEP's Gender Gap Analysis tool.
Thank you very much. Good, thank you very much. So from the video, you can see that the Women Empowerment Principles Gender Gap Analysis tool was launched in 2017. I told you we are celebrating 10 years of the WEPS, and also a follow-up to the WEPS is the Gender Gap Analysis tool to help businesses to implement the WEPS in their operations. So the WEPS Gender Gap Analysis tool help companies access current policies and programs and highlight areas for improvement and identify opportunities to set future corporate targets. So the WEP tools also provides a practical resource companies can use to understand their own performance on gender equality and also what the scope is across Africa. So we have seen that a key challenge that is unique to companies and institutions across Africa is a lack of uniform data available for them to understand, analyze, and contribute to key issues that companies face with sustainable development, including gender equality. So as stated before, only 3%, if you look at the slide here, only 3% in the African region are taking the tools, which is a call to action for all of us to go to the weps.org website, take this tool. It is important for your business if you really want to be involved in the gender equality space. And it is important to also note that the UN Working Groups on Business and Human Rights have also endorsed this tool as a gender lens when you for your business as well. So we are encouraging business leaders in Africa, in the continent, to take this tool and see how you can also take actions as we drive towards the road to 2030. Now, the topics included here in the gender gap analysis tool, unfortunately, we don't have the time to do the training, but you can also, if you want to know more about it, you can also reach out to the organizers of the event and see how they can reach out to us as well. So the topics include commitment to gender equality strategy, equal pay, recruitment, supporting parents and caregivers, women's health, inclusive sourcing, and advocacy for gender equality in communities of operation. So some questions in the tool connect very directly to a company's performance in terms of women's leadership at the board and executive level. And for example, questions that are related to recruitment policies and practices. So now we have discussed the status barrier and there's also issue, and it addresses also the issue of unconscious biases. So it really covers it all. If we want to really get into the space, the WEP's Women Empowerment Principles and the Gender Gap Analysis to provide you with that opportunity. So now we have discussed the status barriers and solutions to addressing Goal 5, which is gender equality in the workplace. So ladies and gentlemen, at this point, we will now be proceeding to the roundtable discussion on the importance of gender equality in the workplace. Thank you. I have to stop share now so we can. Okay, great. Oreva, should I continue?
Yes, please.
Okay, great. So I'm pleased to be joined by business leaders and in Africa to discuss the importance of gender equality in the workplace. So firstly, in the spirit of ladies first, I would like to introduce my first panelist, who is Dr. Amy Jadisimi, the CEO of Lado. You're welcome, Dr. Jadisimi, and if you could please introduce yourself to the opening comment. Hey, Dr.
Amy, I think you need to unmute.
Okay.
Sorry. Good afternoon, everybody. Thank you for having me, and thank you for the wonderful presentation. Over the years, in addition to being the Managing Director of Ladol Free Zone, I have worked strongly to promote business and the Sustainable Development Goals, and particularly Goal 5, which is about female parity and equality. And I'll just leave you with one fact, which is that the McKinsey Research Institute found that if we can achieve female parity in the workplace, we can increase global GDP by $28 trillion. So this is a fantastic resource that is underutilized across the world. And the work we're doing here is important, not just morally, but also financially. Thank you.
Thank you very much, Dr. Amy. So second on the panel is Mr. Lunga Majiga. I hope I pronounced it well. Lunga is the Director of Operations, Jesse Doe Middle East and Africa. Jesse Doe is a multinational outdoor advertising company. You're welcome, Lunga. Could you please help with a minute opening comments?
Lunga, I think you have to unmute as well.
Can you hear me now?
Yeah, we can.
Good day and good afternoon to everybody. Thank you very much for having myself on the panel, and also allowing Jesse Doe as a leading French multinational business that is present in over 16 countries in Africa to come and share what it is we are doing in terms of sustainable development on the continent, what we're doing in terms of gender parity and ensuring gender balance in our business, and obviously promoting women empowerment, not only in our business, but socially in the spaces that we interact in and the businesses that we also interact in. So quite exciting for me to be here, especially as a man, to talk about how men need to create the space, and when I say space, a safe space for women to be advanced in corporate by changing the inherent culture and biases that exist within corporate culture, but also hoping that we can entrench the same in our society. And I think one of the major issues that we have in progressing the agenda of women empowerment is the patriarchal nature of Africa as a continent. Maybe I'm wrong, maybe I'm right, but I'm sure Naomi will correct me. But from my experience traveling across the continent, I have seen firsthand how patriarchy works and how it's moved from social spaces into corporate culture, and it doesn't. There's no gap between the two, and therefore it's what has stifled the trajectory of gender parity in the workspace. So I'm looking forward to interacting with the rest of the panel and really discussing how we can move forward on this subject, because COVID has shown us that the group thinking that has existed in the past has led us to a point where businesses are now, a lot of them on their knees. A lot of women lost their jobs. It was a strange thing to see the statistics when looking at South Africa as an example, where a bulk of the people that lost their jobs due to COVID was actually women. Very strange phenomenon, considering that we are having these discussions and we've been talking about this for the last 10 years. What COVID has also led us to see is that is the increase of gender-based violence, because women are now having to stay at home and work with their partners, obviously leading to increased frustrations in the households, and I think increased pressure due to income issues. So there is, however, a positive of COVID in that a negative stereotype that has existed in corporate is that we all have to be in the office, and therefore creating an imbalance in the home, and the fact that we've always seen that there's a glass ceiling for many women who are striving to also have to maintain a family home and also be actively involved in corporate. So with COVID leading the conversation of working from home, it has also created the space to now have a discussion about changing some of the corporate misnomers that say, we cannot have the spaces to advance women in corporate culture while they are working from home and taking care of their families. So we've now seen, and I've personally seen in a lot of video conferences that I've had, where we are having conference calls on Teams or whatever platform, where someone is sitting there with their children around them. And it's actually quite fascinating, because we've now, as corporates, come to embrace the family life as well for individuals. So I think COVID has created something that I hope that will now start to become entrenched in a lot of businesses.
Okay, thank you very much, Longa, for your opening comments. So finally on the panel, we have Kesani Nobanda. Kesani is the Group Executive Marketing and Corporate Affairs for Nedbank.
Hi, Naomi, thanks for that introduction. And actually, thank you for the presentation, which I think just articulates how big the challenge is in the context of this conversation. As Nedbank, we absolutely believe that business and industry leaders are the critical change agents, and that we are the ones who are well positioned to be at the helm of transformation in the workplace. In fact, our Chief Executive, Mike Brown, likes to say that there cannot be a sustainable Nedbank in an unsustainable society. And actually, if the stats that you've shown on gender parity, and they are right, we are living in an unsustainable society. So for us, I think as a bank, the reason we focus so hard on gender parity and gender equality is because we believe that a sustainable society is actually great for our business. It makes business sense, and it will give us a good financial return. And we know that. I mean, you spoke about just what gender parity can give in terms of the growth of the global economy. We've seen that having more women in leadership positions is good for business. We've seen that the skills and experience that they bring, including like what they've gained outside of the workplace, has been proven to be essential in strategic decision-making, as well as an ethical, sustainable enterprise. All of us on this panel know just the impact that female global leaders like the Prime Minister of New Zealand had in the context of COVID on how they managed the crisis for their countries. So actually, this shouldn't be a conversation that we should be having, because it's so important, and it can grow our countries, can grow our continent in such a positive manner. So because of that, as a bank, we continue to do work to build diversity and inclusion as a key part of not only actually our employee value proposition in areas ranging from talent development, succession planning, flexible working, work-life balance, but also in the context of supporting female entrepreneurs. And that for me goes back to, I think, your first sort of barrier around this informal piece that women have a barrier on in terms of the economic participation. So thank you for having me on the panel. Looking forward to the discussion.
Thank you. You're all welcome to this session, and thank you for your kind opening comments. So to kickstart the conversation, I would like my first question will go to Dr. Amy Jadesimi. So Dr. Amy, get ready. So with typically low representation amongst women in the tech, manufacturing, STEM industry, like as discussed in the case presentation, what can these companies do to support women in their industry?
Thank you. So I think you actually touched on some of the solutions in your presentation, and that's what I liked about it because it was quite practical. I would summarize by saying, firstly, you have to embrace making a seismic shift in the way you recruit and in the way you manage your staff after they're recruited. So for example, in your presentation, you talked about flexible life and how it's important that that is something that is part of the everyday way of working for a company, for women to rise up in the company. Now, in order to do that, you have to move away from the 9 to 5. You have to move away from managers who judge people by how often they see them working in the office, and move towards a system that rewards productivity. Because if you say to a woman who just had a baby or who has 2 children at home, I want you to achieve these 10 KPIs by the end of the month, and you judge purely based on those KPIs, and you give her a flexible working schedule in order to do that, you would find, and the data shows this, that women outperform. So having a mindset that says, I'm going to revolutionize the way my company does business, particularly in the areas of personnel management. I'm going to make big changes. I'm going to invest a lot of money in those big changes, is the starting point. You need to throw away any thoughts you may have about this being an incremental shift in the way you do business. And you also have to think about radical ideas. Even in a country like Nigeria, think about whether or not you want to introduce paternity leave, and not only introduce it, but make it mandatory. And in making it mandatory, you're taking away the stigma that's associated with men going on paternity leave, because you're saying, well, all men have to do this. And this is done in some European countries. So once you embrace the concept that this is about making really big changes in your business, you then have to look at how you're going to pay for it, because change costs money. And in looking at how you're going to pay for it, you can tie this to some specific financial outcomes that your company will gain from making these changes. So we know, for example, that companies that have equal representation of women, or have at least 3 women on the board and have women in the C-suite, make 42% higher profit than companies that don't. We know that they get a 66% higher return on investment, 55% higher return on equity. So you then have a proposal that says, well, I'm going to make these changes. It's going to cost a lot of money, but it's going to make a lot of money, and it's going to enable us to outcompete in the future. So putting those 2 things together is also really important. You need a holistic plan that looks at what you need to do and how you're going to pay for it in order to make these changes happen and in order to make them sustainable. And then there are other ideas that you can embrace. And this is around the idea of sustainability. Companies that put sustainability at the forefront of the way in which they do business tend to move closer to gender parity and equality, because women tend to be better at leading on sustainability. So thinking about the values your company has is really important. And there are 2 benefits to that. One is, again, sustainability equals profitability. Companies that are more sustainable make more money in the medium to long term. 2, if you have values that are more aligned with the values that women lead on, you will attract more women. You will create a value proposition when you're trying to recruit that is more attractive to women. It's also, by the way, more attractive to young people, and it will be one of your company's biggest recruiting tools for the lowest cost, just by advertising the fact that you have values aligned with the Sustainable Development Goals and sustainability in general. I think then you can look at what you're doing in the areas of lobbying. So within the company, you're making changes, but also in your environment, you're making changes. And lobbying isn't just about government. Lobbying is also about educating your staff and educating your community. So what are you saying to the people in your community, both men and women, about how it is, what matters about female empowerment, why it matters. What messages are you delivering to the community about female empowerment in the workplace and in the home, about the benefits this brings to the home life, about the benefits this brings to the economy. And we've all seen the data on improvement in GDP by having more women in the workplace, by educating more women, and so on. So in summary, I think there's a tremendous amount the business can do. I think it touches on every aspect of the business. I would suggest that the businesses focus internally first, and they set up systems that can enable those seismic changes that I'm talking about that they need to make to happen, to be implemented at every level of the company. In order to do that, by the way, a good place to start is to think about who is leading this change. Do you have at least 3 women on your board? Do you have quotas for women in teams across the company? So in order to make this change, you have to do some work up front, particularly as the managing director, to make sure you have the right teams leading the change. And then you can think about how you're going to pay for it and how you're going to justify it to your stakeholders. And then you can think about your impact on the community and how you carry the community along with the changes you want to make, and educate them about the benefits, the tremendous benefits that will come from the changes you're making to the way you run your company and improving on female parity in the workplace.
Thank you very much, Dr. Amy, for providing such wonderful insights. Thank you, truly appreciate it. So I'll move over to you, Lunga, now. My question to you is that, so we know the experience and approach to gender equality is different in every country and varies from companies to company across Africa. So what is the approach for a multinational corporation like yours operating across several companies in Africa when it comes to support for women? You're on mute. Could you please unmute yourself?
The good and the bad of technology. Naomi, for us, this journey started when we started having a discussion with our board in Paris about what we are seeing in the different countries that we operate in across Africa. And I think it was then found that globally, we almost are experiencing the same issues. It was not just an Africa issue, but we've seen it in the Middle East with a lot of the movements in the Middle East, especially from women. We've seen it across Asia. We've seen it across the Americas, especially in South America, which is almost has got similar dynamics to our markets. And what we picked up, as I said in my introduction, was the issue of patriarchy that is well entrenched not necessarily in business culture, but in social in terms of social status, in our culture, in the way we grow up. So it becomes entrenched in us. And therefore, you can't then split that from, you can't think that it's going to be different when you go into business, because those very people then get employed in our corporations, and they run the businesses in the same manner that they would run their own homes. So what we then lobbied right at the top levels of not just our business, but even in our industry, is to say we need a group-wide policies that will not differentiate between markets, that will also enforce the goals that we're trying to achieve. And the best way to do that is by hitting people's pockets, right? So what we've seen is that in driving a group-wide policy through the right set of KPIs, and in managing and measuring across the different countries that we have, regardless of what society looks like on the outside, But if we start in our organization and build the culture that says that we should have gender parity within our business, this can then get taken to our social spaces as well. And also it's creating enough awareness within our businesses and the corporate culture to be able for everyone to be aware of the issue. If you don't walk into a boardroom and look around the room and say, this doesn't look right. If the awareness is not at the level where a man walks into a boardroom or a meeting room and looks around the room and says, something doesn't look right, something feels off, there are not enough women in this meeting. You have not entrenched the culture of diversification in your business. So you need buy-in from all your stakeholders, and that means that every single one of the country managers that we have and business unit leaders that we have across the continent and globally needs to be driving the same message in the business and cascading it down from the top levels of the business to the bottom levels of the business. Now, what we have seen, and we've now deployed a group-wide gender balance awareness policy. Because when we put targets in place, to just simply put targets and policies, overarching policies in place, it does not necessarily drive the message across, because there are biases and group thinking that has been entrenched in a lot of corporates, including ours, since our inception. I mean, our business is over 50 years old, and we are globally represented in over 80 countries. So as you can imagine, the experiences are different in every single country. And what we see is that things like sexual harassment, for instance, are not seen the same way in the different markets. Where in one market something is seen as sexual harassment, in another it's normal. So we have to then create the platform where we are saying it's not normal in any country and in any business and in any business unit. So, and the responsibility lies with us men taking that responsibility, because we are still making up the majority of the leadership of the businesses. As you would have seen in your statistics, men still control probably over 70% of business. So the group thinking is still entrenched in our business. It means that we are still not developing the pipeline that is going to change that culture, because everybody wants to employ or have someone with similar thinking sitting next to them. And it's exactly like that in our boardrooms, and we have to accept it, because if we don't accept that that is the case, we are going to always end up exactly where we are today. And the impact of that you'll see.
Okay, great. Thank you very much, Longa, for providing such best practices on what your company is doing as regards gender equality. And it's good you mentioned that the change has to come from the top level. A CEO or board member has to walk in and see that there is no balance and begin to make those conversations. So thank you for providing such wonderful input. So before moving over to our next panelist, I would like to inform our distinguished audiences that I can see the conversation going on in the chat, but feel free to put in your questions. We are supposed to have one more panelist, but she couldn't make it, so I could just put anyone on the spot by asking you her question, so get ready. So now, moving over to our next panelist, we have Kensani. So my question to you is, what needs to change from a financial perspective in order to close the gender equality gap in Africa? So maybe you could share examples of successful tools, strategies, or solutions that you have seen from your experience.
Okay, great.
Kensani?
Thank you. Yeah, can you hear me?
Yeah.
Okay, perfect. So, it's so interesting for me, if I just reflect on the previous conversation around how Africa can come out of the COVID crisis, right? So we generally talk about Africa as a land of opportunity, right? The continent is home to some of the world's fastest growing economies, and it offers an exciting frontier of businesses looking for growth in new markets. But what is clear when we talk about this growth opportunity, that it's only there for men. Like, that feels like what's there. And actually, this growth opportunity has to be for both women as well as men in order for the continent to achieve the growth that it requires. So from a financial perspective, I actually want to talk about 2 points around the role of women in growing and participating in the economies of the continent. So the first one is really about how do we ensure women entrepreneurship? And then the second one is around the pay gap, right, that exists. And I mean, some of the stats you showed, like the Tunisia one, it's like really scary in terms of the existing pay gaps. So let me talk about the pay gaps, and I'll start with that one. So what does closing the pay gap mean? It means that all leaders need to take the necessary steps to identify pay disparities and create an environment where there's transparency in reward programs, where there's increased scrutiny of performance and bonus outcomes by gender, so that we can achieve pay for all. And I'll give you a practical example of how we do it at Nedbank. So once a year, we go through our pay review cycle. As the exco of the bank, we actually, before we sign off the pay review cycle, we start with the performance ratings. And in those performance ratings, we look at race and gender in order for us to be able to see that there are no skews to what the numbers are telling us. So that's just from a performance perspective, because by the way, before you even get to pay, you start to see some unconscious biasness happening simply in how people have been rated in terms of performance. And I mean, I don't know about you, so maybe I'll just give also just a personal sort of anecdote. Even in performance discussions, men tend to be much more confident in how they articulate how they've performed versus women, right? So that's why it's important that before you even get to the pay and all of that, ensure that from a performance perspective, you're not seeing unconscious biasness come into that. Once we've then done that, we then look at the actual reward, and we look at it. So obviously for us, it's in 3 areas. It's the actual salary increases, it's the actual bonuses that are going to be given, as well as the share allocation. Again, and I mean, for us, a big part of our business is obviously in South Africa, and race plays a big role in the context of redressing, the effects of apartheid. So again, we look at race and we look at gender to ensure, again, that there's parity and there's no bias to the pay. We do that as a group exco. So we do that for the guys who report to us, the cluster excos, so basically the senior management of the business. And then that cluster exco then does it for a layer down. So those are when we're looking at specific, individuals. What we then also do is we look at the overall organization. And this time we take the functional areas, that would be marketing, HR, the frontline businesses, and we do the same cut in terms of ensuring that actually, when I take marketing, for example, if I look at the bonuses and the shares that we've given, are we seeing that women are being given less than generally what we're seeing men being given? So I guess my point is that the leaders, you actually have to do this type of exercise, right? You can't just think that gender pay equality is going to happen in isolation if you haven't, as an organization, put something in place and have explicitly applied yourself in terms of, understanding what it looks like and then how you're going to solve for it. So I think that's the first bit, is on gender pay when it comes to the financial piece. The second piece, I think, from a financial perspective, is how do we fast track equal economic opportunities, equal economic participation, and close the opportunity gap for women? And if you'll allow me to use my brand's narrative, so we need to see money differently and invest where it really matters, in honestly creating pathways for development for women, for African women and girls, and ensuring that, where women are underrepresented, we unlock opportunities and we develop public and household infrastructure. So how do we do that? I think firstly, in this, fourth industrial revolution, technology and all of that, what we know is that, if we leverage on tech, innovation and education, we are able to actually fast track women from a financial inclusion perspective, as well as to empower them to enter fields that will grow our economies. It's just a similar stat to what you spoke about, but specifically for Africa, the McKinsey Global Institute shows that Africa could add, I think it's $316 billion, or 10% of the GDP by 2025, in a full potential society scenario, which women and men play identical roles in labor markets. So this is fantastic. It's like what I said at the beginning. We know that it's good for business. So again, from a Nedbank perspective, what we do is, as part of our transformation journey, we've looked at, how do we bring and build more female entrepreneurs? So if you look at our value chain, and I'll speak again specifically to marketing because this is in my world, we look at the media owners that we work with, we look at the advertising agencies that we work with, and we make sure that we've got very clear targets on what success has to look like. We then have an ESD program that identifies these female entrepreneurs, and we ensure that we bring those into the Nedbank value chain. Again, these are programs that companies have to do deliberately. And I think that's the thing for me here, is it's not going to happen just because we wish it to happen. Leaders in organizations actually have to take up the mantle and drive it. I saw a question in the panel that said, we've been talking, people are aware that there's a gender, disparity. We've been talking about it, but, how do we start to ensure that companies implement these things, and what should governments do? I guess in South Africa specifically, simply because of the journey that our country has been on, we have, what we call transformation requirements in terms of the BBBE scorecard around empowerment. So we do get held to account by our government in the context of if we want to do business with government. So what we then do as an organization is we then hold other suppliers to us accountable on both from a gender and race perspective. But again, like I said, it really has to be driven from the top, and it has to be driven deliberately. It's not just going to happen on its own.
Thank you, Kensani, for sharing such wonderful practices. I know Nedbank is a member of the United Nations Global Compact. So when I saw Nedbank was speaking, I was very delighted. And it's good to see that people are really taking the lead and leveraging the tools that the UN Global Compact provides to help businesses bridge the inequality gap. So thank you for sharing that. And I'm back to you, Dr. Amy. So what are some basic considerations employers should keep in mind to apply a gender lens to their operation? So be grateful if you could share from your company's experience what specific intervention your company has made for your female employees.
Thank you. I think particularly in our industry, so for those of you who don't know Ladol, we run an industrial special economic zone in Apapa Port in Lagos. So we started building the zone out of a disused swamp. Now we have the largest fully integrated deep offshore logistics base, and we have the largest fabrication and integration yard in West Africa in the zone. We're fully independent, so we have accommodation there, we have all the utilities on site, and we're building a 24 megawatt power plant. So that shows you that the zone covers a very wide range of activities. We have departments, therefore, that are heavily focused on engineering, civil engineering, electrical engineering, development and building. We have departments that are focused on logistics and service provision. We have fabrication focus. And then we have, areas that are more commonly associated with women, like human resources and corporate social responsibility and marketing and development. So the first thing about our company, which is unique and which we're privileged to be able to do, is because we were building from scratch, something that had never been done before in Nigeria, and because we were private, we were able to take on board the Sustainable Development Goals as part of the framework of the company's development. And that includes diversity. So we recognize that the quality of what we build and what we deliver depends on our people. And so we use mechanisms to ensure that we only ever hire the best people. And so that means we're a company that's heavily compliant. And compliance is a really important way of helping to counteract the biases that we've all been talking about, because we all have those biases in us. And if you use a high level of compliance, basically means you have strict policies and procedures that people follow when they're hiring, when they're reviewing people, when they're recommending people for promotion, etc. On top of that, though, in some of the areas that Ladol works in, so logistics, we know that there are hardly any women in that field, even civil engineering and so on. So in those areas, we have to go out of our way. We spend more time recruiting. We go to, instead of going to 1 or 2 recruitment companies, you go to 5 or 10. Sometimes we even go as far as specifying, we don't have any women applying for this role, only look for Nigerian women. The other side of the coin, though, is that because a lot of the things that we do haven't been done in Nigeria before, or are being done at a much higher level and with higher quality standards, we have to train everybody. And so what we also try and do is support women moving up through the company. So if you're doing well, and therefore think you have the potential to go all the way to level 2, then we have to make sure that you're getting not only the training you need, but in the case of a woman, we have to make sure that you understand your choices. So for a lot of women, they think they don't have options, particularly in Nigeria. They don't want to tell you that they want to get married. They don't want to tell you that they want to have kids. They're worried they won't be able to come back. So you have to have those policies out there for people to see, first of all. So you're putting your policies out, you're putting your values out in front of people. And then you need to have those conversations. And quite often, particularly in Nigeria, it goes down to the level of one-on-one conversations. But there needs to be a general policy that everybody understands what you believe in and how you work. And then you need to put in place mechanisms for people to be able to leverage off those company policies. Then during COVID, I think it's already been mentioned that in some ways it was easier for women because things like, for example, the flexible work-life balance. What we did at Ladol is we have 150 people permanently living and working in the zone. So during lockdowns, we're able to lock down the zone, create a sterile area, and people carry on working. Women, you have to make sure you have facilities for women, that they're safe, that they feel empowered, and so on. And that comes from a range of things, not just having the correct facilities on ground, but also the education, the security you have in place, the norms that you develop in terms of the company culture. On the other hand, you have some people who are working from home. And to have a level playing field there, you have to have, again, compliance. You have to have productivity tools in place. We lean heavily into IT. So there are tools that you can adopt. There are compliance policies and procedures that you can put in place. There are norms in the culture that you can establish. And in the case of Ladol, because we thought about all this from of the company's DNA, and it's easier, obviously, to do that than to come back and redo systems that you already have in place. The last thing I'll say about this, though, in general, and everybody's touched on it, is that this is a cultural issue. So in the same way that you're empowering the women who work for you, that you're going out and recruiting women, you also have to educate the community and talk about what you're doing and market it and enable people to educate their own communities. So empower them with the information to go and talk to their families. And I'll say a very short anecdote. My grandmother, when she was growing up, half my family is from Warri, so she was growing up in Delta State in Warri, and at that time, families didn't believe in educating women, and her father, so my great-grandfather, had to kidnap her and take her away from the family and place her with another family so that she would be educated, because sadly, my great-grandmother died when my grandmother was young. So her father educated her against the family's wishes. And years later, after she was educated and very accomplished, members of the family came to her and apologized to her that they didn't know that women could do this, that they weren't bad people, but they didn't educate her because they just didn't think that this was something that women could accomplish in life. And so educating the community and educating the families that work for you is as important as the changes you make in the company. Thank you.
Thank you so much, Dr. Amy. Truly appreciate your wonderful best practices of what Ladol is doing, and also your anecdote as well. It's good. This is actually what the responsible business practices that the United Nations Global Compact preach and encourage businesses to set realistic and ambitious corporate targets towards responsible business. And it's great to see what Ladol is doing as regards gender equality. So I'll move to Lunga now. So Longa, my next question for you is, we all know that to deliver on the 2030 agenda, we know we are on the decade of action for the SDGs. So we know that to deliver on that agenda, we need to amplify partnerships. So what partnerships or alliances has your company found useful or successful in ensuring that the views and needs of women are included in your workplace?
There we go. So thanks, Naomi. I think before I answer your question, there's a controversial issue that's sitting in my mind, and I know it was in your presentation, which is the issue of queen bees. And it's something that I've seen in various areas of our business, which is queen bee responses as a way of achieving mobility within corporate structures. And I think it's one of the issues that, as you bring in more women in your corporate structures, you start to see that they start to funnel and create barriers for entry for other women. And I think it's something that from an awareness perspective and training and development, we need to address to create a stable environment, especially in male-dominated environments that will create the right platforms for women to not feel the need to discourage other women from entering into leadership of a lot of corporates. So just 2 cents worth from that. I think it's quite important for us to address it in a lot of our organizations, because I've seen the way it stifles the very attempts we try to make at women empowerment. On the issue of partnerships, I think we're looking at our value chain, which starts from government for us as a business. Our key landlord is government entities, state-owned entities, and municipalities. And what we have been working on is entrenching a culture, especially with tenders that we participate in and bids, is that we haven't been seeing sustainability as a subject in the bidding processes, which was quite interesting, because when people talk out there in various platforms, they say that we are looking at this and we want to encourage it, but when it comes down to paper, to putting pen to paper or putting money where your mouth is, you don't see it. So when we were having a business conference just the other day, and we're evaluating tenders that we are bidding, that we are participating in, and a lot of them, and we're talking close to over 60%, do not have any criteria that looks at things, the sustainability issues that we are discussing, including a gender balance within our corporates. So we are then now saying to our stakeholders that it has to be there. Otherwise, none of us are going to improve. If we participating in your bidding processes are trying to transform our businesses in order to engage with our stakeholders meaningfully and our societies meaningfully, and other businesses are not forced to do the same through legislation and policy, then we're not going to move forward. So we have to have the right conversation, even with our stakeholders who are our landlords and clients, to say, let's all engage one another in this conversation to make sure that we're putting the right policies in place and the right legislation to ensure that we are almost forcing gender parity. Because in a lot of organizations that are probably not on this call, the discussion is not happening at all. So they need to be pushed in the right direction, and that's going to be through legislation. And we need our clients to be part of that process of saying, we're not going to do business with you if you don't fall in line from a sustainability strategy perspective. You have to conform, change your business, change the mindset of your business. Then we can start moving ahead. And then as part of our value chain, we have our clients, then we have our suppliers and contractors that we work with. Now, we also see them as part of our partners because we can't grow our business without them. However, because it's part of our business model and our strategy to entrench sustainability and gender balance within our business, what we have done is to say our suppliers and contractors have to do the same. So they have to mirror our business in order for them to do business with us. And from a supplier perspective, we are now prioritizing actively female-owned businesses, for instance, to say we want to give opportunity to women-owned businesses. And for me personally, working in a lot of countries, I have witnessed that working with a lot of women-owned businesses or businesses that are at least at a 50-50 level, have gender balance or parity in them. We get a lot more success rather than the group mindset that we find in male-dominated companies, where we don't get the value that we are looking for. So we have to strengthen, and I implore a lot of businesses that are here to look at their complete value chain in terms of this. Otherwise, you transform internally, but you do nothing for the society around you. So we have to push the agenda with all our stakeholders. And it was great for us to partner with the Shared Value Initiative and Tiki Barnard. We've been working together, especially in the last year during COVID, where we were looking at issues of gender-based violence. And we used our platforms to communicate on gender-based violence. And that's through our billboards, our digital screens, etc. Every platform that we have, communicating and awareness campaigns on gender-based violence. And that's something that we want to continue supporting and working together on. So it's really important that we all actively participate and engage with all our stakeholders and our value chains to push and actively drive the conversation through our policies, but as well as through our contractual engagements with all our stakeholders, and say, look, we're not going to do business with you if you don't transform. Sorry. So I think that really for us, it's ensuring that there's a ripple effect or a butterfly effect in corporate social responsibility. And when I say corporate social responsibility, it's the responsibility that we take as leadership within our businesses to enforce the fact that we need to have gender parity. We've seen the successes in some of our business units in various countries that are actually female-led and female-run. We have fantastic CEOs of some of our countries that have done very well in our business. And we've seen the value that they bring, not only from a profit perspective, but from a societal perspective, and the products and technology that we can bring to alleviate social ills. So it's for me a time to actively participate for everyone, and we need to stop window dressing and talking shop and sitting in our boardrooms, and start actively getting on the ground and actually put our money where our mouth is.
Thank you very much, Lunga. Thank you. We truly appreciate your contributions. Good to know what your company, Jesse Joe, is doing in that regard as well. So we're running out of time. So quickly, we're supposed to take questions, but our audience have been very engaging. So we're having more of affirmations and questions, which means they truly align themselves with what we are discussing here. So quickly to Kesani, my final question is, What lessons can Africa as a continent learn from similar economies globally on how to best address SDG 5 financing gap and support women's empowerment in Africa? Thank you.
Cool, thanks, Naomi. And so I'll answer that, but then I'll also put at the end of it a little bit of my own pet peeve as well around this sort of gender parity conversation. But I guess to start off with, in terms of the SDG 5 financing, is that in order to achieve our goal of gender parity, we absolutely require specific funding for SDG 5. We require adequate funding from all sources, and I actually think us as banks can play a key role in doing this. And there's two examples I want to highlight that we can learn from. So the first one is the 5x20, which is a Coca-Cola program where they basically said they want to help 5 million entrepreneurs, from fruit farmers and artisans to recyclers and retailers, become part of their value chain by 2020. And in fact, as I was prepping for this, I read recently that they actually exceeded those targets. Again, this for me is an example of deliberate target setting, communicating those targets, because someone needs to hold you accountable to those targets, implementing the plan, and then measuring success as you are actually doing the program, as well as at the end of it as well. So, that's for me, quite important in terms of really being able to achieve funding in that space. We've also seen an interesting development in terms of women bonds. So, I saw the first gender-focused listed impact bond in South Asia, which has a target of empowering 385,000 women in that part of the continent. And as banks, if you see what we've done, so for us as Nedbank, we use the SDGs to measure the impact that we have in society and to measure our purpose. And in order to do that, we've landed, from a green economy space perspective, we've launched the first ever green bond on the continent. Now, why can't we do that for women empowerment? The good thing about doing this is that you then have a bond where proceeds are invested exclusively in projects that have female empowerment in their heart. So the South Asia example I'm speaking about is already on its fourth bond. And I looked at just one of them, the second bond, which in January 2020 was listed on the Singapore Stock Exchange and was Asia Pacific's second multi-country gender bond, and was able to create sustainable livelihoods for 250,000 plus underserved women in the region. So the focus that we seem to have, at least from what I've seen, with banks, on sort of climate change or energy, we need to put the same level of focus in terms of funding to reduce the gender parity, to improve gender parity. But before I finish off, Naomi, a little pet peeve of mine that I think I just wanted to speak about, because I think as women as well, we do need to lead this challenge. It's nice to have someone like Lunga here, right, who as a guy is advocating, for us, and his organization is advocating. But I think as women, we actually need to step up as well. And part of it is, how do we start to develop confidence in our abilities and start to have difficult discussions. And I'll give just a quick example. I always use this when it comes to pay, for example. When I went on my expatriation to Dubai, I had a colleague who was going on the expatriation to the UK, a guy. When they put my offer in front of me, I literally just signed the offer and moved on with my life. And he negotiated back, and he took 2-3 weeks, in negotiating his package. And I was so surprised. I said to him, why did you take so long? He said, no, I never take what's been put on the table. I always negotiate backwards, And then I had a conversation with our vice president for HR and said to him, do you find that as women, we generally are much more accepting of what's been put in front of us? And he said, absolutely. And he said, actually, you are a great example of that, where you just signed the deal that we put in front of you. And if we don't share these stories and we don't share these examples, we will never grow as women, which is why I always talk about it, because now I am much more aggressive when it comes to my pay. I am much more aggressive when it comes to my worth. And the thing that I always wanted to reiterate to us as women is that the worst that can happen is the other side can say no. But at least you've put what you want on the table. So for me, I just think absolutely we need males and people like Lunga to advocate and drive, but we as women need to step up as well and actually drive this agenda and drive our own agendas and our own narratives, and stop letting men be the only ones who are driving the narrative.
Thank you very much, Kesani. We are almost coming close to the end of today's discussion. So I'll just ask to close, we've just asked the panelists to give just like 30 seconds on your closing remark on this session. Just give us the closing on 30 seconds each, please. Let's start with Dr. Amy.
Thank you. Thank you for including me in such a great panel. Thank you, Naomi. So I think it's important to embrace the fact that in order to achieve peace and prosperity in the world, we need to achieve the United Nations 17 Sustainable Development Goals. And there's no question that in order to achieve those 17 goals, we must achieve Goal 5, which is female equality. Without achieving Goal 5, we're not going to achieve the SDGs, and the world is not going to be the peaceful and prosperous place that we all know it has the potential to become. Thank you.
Thank you, Dr. Amy. Lunga next.
Thank you very much. And I think as a closing remark from my side, I think women have to be bold and be confident to fight for yourselves. Like Kenzie said earlier, it's important to be able to negotiate for yourself and be confident enough to fight for yourself and speak up when you are invited to the table. Have the boldness to be able to speak up and share your views, because the world will not change when people are keeping quiet. So it's really key that we as men we create that we can create the platform. But at the end of the day, women need to be bold enough to speak up and share your ideas and your views. Otherwise, the world will forever stay the same. Thank you.
Thank you, Lunga. Finally, Kensani.
Yeah, thanks, Naomi. So I guess to close off, I really want to reiterate that actually gender parity makes business sense. And I think when organizations and leaders have that at the back of their heads, it does not then become, it's not a bad thing. It's actually something that will grow your business and will grow your organization. So for me, if people take that one thing out of this, I think it will be pretty powerful. And then the last thing is just to say, for me, what COVID-19 showed was that actually the values that female leaders bring to society, to organization, are so priceless. The thing that for me struck me was something like empathy, which is normally reflected on as being a weakness, actually came across as a superpower. If you looked at the type of year that we had, a lot of the things that we have as women are superpowers. That's why we should be in more leadership positions, because we bring more than just business value and business sense. We bring a lot of the more important societal things that can make organizations successful. So yeah, and thanks, Naomi, for having me on the panel.
Thank you, Kensani. Thank you, everyone. This has been a very supercharged panel. And at this point, we have now come to the end of this discussion. Our topic for the session has been the importance of gender equality in the workplace. We thank our wonderful panelists for providing such great insights on how to bridge the gender inequality gap in the workplace. And to our very cherished audiences, thank you for listening in and your very engaging conversations in the chat. We hope that you have found the session educative and impactful. We call on everyone to continue to work towards advancing gender equality in their various organizations, including the workplace, the marketplace, and the community. We call on you to sign up to the CEO Statement of Support for the Women Empowerment Principles, take the gender gap analysis tool, and let us all work towards advancing gender equality in our continent. And together, we'll make this happen, because equality means business. Thank you. Over to you, Reva.
Yes, thank you very much. In fact, I didn't want the conversation to end. I don't even know where to make a comment at. Everything really resonates, and I think the point of let's move this further and take action. I particularly liked what Lunga said about let's add it in our every requirement. So it should be awkward for a man to have just welcomed the baby and be in the office when he should be on paternity leave. It should be a part of what we expect the company to look like, the society to look like. So thank you very much, everyone, for your comments. In fact, our participants in the chat, I was learning a lot more from you and even from the panelists. So thank you very much, Naomi. Thank you very much, Lunga. Thank you, Kenzie. Thank you, Dr. Amy. We're going to quickly close because we're going a bit above time, but I would like to welcome Professor Abel Kinoti to just close us with a summary, although I think everybody has learned a lot today, and then Tiki will close us out with a call to action. Professor Abel.
Thank you very much, Oliver, once more. Afternoon, good morning to you all. Let me also begin by thanking the facilitators and the presenters for the good work that you've done. You'll all agree with me that we had a very beautiful morning and afternoon session, and some of the issues that I've taken into consideration are as follows. Now, Frank posed a question to us in the morning, and he asked us, given the epidemic and mitigating measures that have been adopted, how do we ensure business sustainability with shared values and gender parity? That is a responsible business. How do we do that? Professor Chris, the Dean, Lagos Business School, gave us an analogy of the 2007-2008 financial crisis. And he asked us, what lessons have we learned as Africa? And if we have learned anything, how are we prepared to cope up with this particular given situation, either as private or public institution? He reiterated by telling us that it is indeed a unique opportunity for business to think beyond profit. If we are ready to do just and to be all inclusive in this particular given arena, to alleviate the various issues that have bedeviled this continent: environmental, poverty, inequality, social issues, a myriad of problems that are affecting us. And the only way, as he noted, is that we have to take a collaborative approach. We have to have a teamwork and a spirited effort that can address this problem, because philanthropy alone may not pay. Equally important, meeting the SDGs will not give us the results. We have to go beyond regulatory framework by coming up with the social innovations and solutions that can bring prosperity. I think this is what has been envisaged in the Africa Agenda 2063, and it's something that we are all behind in trying to pursue. So we have to come up with private ways to address the problem. In response to the two questions, a close look at a video presentation that was given to us that was a discussion by one of the faculty member of Lagos Business School, and also the CEO of Absa Bank and the CEO of Equity, happened in the banking sector. We anticipated a recession to take place, but this never happened. Many things were thought in terms of how the currencies would be devalued and what have you. But what came out clear is that we need to be geared towards addressing some of these problems, well prepared, with more efficient banking systems, which will keep on reducing cost and generate more revenue, and give us the light at the end of the tunnel, and create value within the entire banking network. The CEO of Bank Absa told us that we need to be agile in whatever we are doing, more customer-centric, if we are really going to realize the problems. In all ways, we have to be responsive to customers, and that's what most of the banks did in Kenya and even in other parts of the world. We need to support businesses in as much as possible, and even create innovation hubs that can help us come up with very good solutions. Also, in terms of diminishing big corporations, so that in Africa we take into consideration of even small, and in as far as the banking sector is concerned, can do that. Now, the next issue revolved around how can we address this sustainability in the stock exchange, and it was moderated by Maria Grover, and the panelists were Tinwande, Shamira, and Geoffrey Odundo of NST Nairobi. So there were again similar issues that came up because of the COVID, and different ways were pursued of trying to address them. So it came out very well that in order to address the recovery, the private sector must stand up. In as much as we're interested in the government, also the public sector must come in very clearly. And we need to build more discussions around that area. There is need for capacity building, especially in regard to reporting. How are we reporting what we are doing? A lot of thought leadership forums can also come in to help us do that and introduce a lot of other avenues of making money, like green bonds. It was also noted that there is less investment in sustainable or shared value initiatives. This is an area to do it because most of the institutional investors are looking for bankable investments, market-related returns, and sometimes that's not the only thing we need to really be pursuing. So we need to look inwards in terms of what we have, and Jeff gave a very good example of the pension schemes in Kenya, where we have Kenya Pension Infrastructure Team that is looking at all that which has been probably being not properly invested from the government and the private sector. How can this be put into use? Along with that, there is the question of, are we really investing in sustainable projects like green energy and so other things? And there are several funding options that are available, like green bonds and green initiatives. There is also the room for borrowing from IMF and the other bodies, but the question is, for how long will we keep on borrowing? Yes, it's good we are borrowing to address the problems, but how long? Alternative ways of addressing financial issues driven by social entrepreneurship, creating social business models that are really touching on what is in us in the African continent in terms of maybe adding value to the agriculture sector. How can we do that? Can we bring in more machinery, more equipment, and even put up standards that meet the international level? How about taking advantage of the African free continental trade area, intra-Africa trade? How can we do that? So it is time to action immediately on these aspects. So it was observed that we should never let a good pandemic go into waste. However, this cannot happen without gender parity. The session on gender parity was moderated by Naomi, and the panelists were Dr. Ami, Runga, and Casey. Whereas business has been happening all along, there are salient issues which have emanated that are very thorny, especially to us human beings who are really driving the sector. The disparities in terms of incomes, like in Morocco and Tunisia, they're extremely very high at the Middle East. Women being concentrated in the informal sector as opposed to the formal sector. Unconscious bias, lack of flexible working options, and safe workplace. However, it was noted that there were some positive things that came up with the pandemics also. Like during the pandemic, people were able to look at both sides of the home and work dimensions. They were able to do that. And people were able to embrace family values. So we ended up actually thinking together though, as it was stated, women, or it has been seen, were mostly affected. As a way out, we can all of us incorporate the women empowerment principles that, among others, address the corporate leadership issues. We have more women, fair treatment for women, health and safety for women, education and training, enterprise development, community initiatives, and the reporting. And there is a measure which can be used, the WEB's gender gap analysis tool that can be used to do all that. If we incorporate women, we'll have close to $28 trillion and then to the GDP. If we don't, then we have another 100 years of scratching our hands and scratching our backs, wondering how we can do it. Measures that have yielded some very good results, like in South Africa, the BEE with the transformation scorecard has given us a lot of mileage in addressing the gaps. If we can reward productivity, because we're equally good at that, we can have values that factor in all of us. We can also have clear gender policies, women entrepreneurship, minimize the pay gaps, and also incorporate women in the fourth industrial revolution. We need also to target on what success looks like, and above all, we can also have gender-related bonds, which can help us finance the gaps where they are, and there are cases in Asian countries that have been used to give us that. In conclusion, it has been noted that we have to step up as women, or all of us. Women need to be more aggressive to address the gap or the parity gap that is coming in, and minimize it as early as possible. So that is the summary of findings, and thank you for listening, and have a fruitful afternoon and another day tomorrow. Thank you.
Thank you very much, Prof. And finally, Tiki, to close us out.
Okay. Thank you, everybody, and good afternoon to everybody. I'm going to be very quick. I just want to say there has never been a clearer example that COVID-19, that the success of business depend on a healthy society, and the health of society depend on a successful economic base. And I'm listening to all of the speakers today here. There were two clear underlying messages. Firstly, we cannot solve the problems we face today using the thinking of yesterday. Secondly, the private sector has an enormous role to play to accelerate, engage, and deliver solutions that benefit all. The private sector can be the change maker. We believe, as shared value advocates, that shared value is a powerful tool to create a better world, whilst increasing the success and sustainability of business. Through practicing shared value, the private sector can create economic value and value for society. And as I said earlier on, we call that profit with purpose. I want to thank everybody today. If I listened to what Abel just said, and we listened to Shamila and Jeff, Tanade and Maria, it was just all of the conversations were very, very rich. And the one thing that I took away from Jeffrey and Shamila and Tanade and Maria's discussion is that it's time for action. It really is time for action. And one message that we as leaders also need to take home today after the gender parity panel, which I could have listened to for the whole day, is that gender parity in the workplace is imperative for Africa's economic recovery. As leaders, we need to realize that gender parity in the workplace is a necessity for societal and economic recovery. I also feel very strongly that we need to create solutions for Africa by Africans. We need local funding, local borrowing, because if we can commit to eradicate corruption, we won't need to look outside of our continent for funding. We have the continental capabilities, the local knowledge and expertise, and we need to stop looking outside of our continent for solutions as they're all here. So my call to action today and what we need to do going forward is to the financial services sector, please create financial solutions that will favor those that need it most. To our institutions like the NSE, the JSE, the NGX, please let's lobby for funding and policies that favors those that need it most. To our business leaders, please put policies and practices in place in your business that favor those that need it most. And to our private sector, we have the biggest responsibility and capacity to bring about change. Let's stop looking at government, civil society, and others and be the change we want to see. Let's create sustainability. Let's shift strategy to one of profit with purpose, and let's practice creating shared value as the future depends on the choices we make today. Thank you, Oriva, and thank you everybody for making the time today.
Thank you very much, TK. And I would like to end with another thanks to all our participants. Thank you very much. You didn't just tune in, you didn't just listen, you contributed. You made this conversation a forum. And we look forward to seeing you tomorrow. So tomorrow we're taking the conversation even further, discussing how we can leverage the Africa Continental Free Trade Area Agreement for sustainable recovery, and as well as going deep dive into shared value and what we can do with building strong institutions. Thank you very much, everyone. And we look forward to seeing you tomorrow, 10 a.m. West African time. Thank you, everyone.
Program started because of the gap we found in the marketplace that NGOs or non-for-profit organizations are critical players in the sustainability space, because many private sector companies actually make use of the services of NGOs to actualize their sustainability strategy. Unfortunately, we found a lot of skills gap in these organizations in terms of the way they are run, not being very professional. One of the biggest issues is being able to run these businesses and have succession. And succession means getting young people into the space. So the program focuses on training people who are not more than 35 years so that their interests can be enkindled in this and also get them to become the future leaders in the social space.
And in where are we now, you also look at your environment. And in looking at your environment, we use what is called PESTA. So when you're looking at your environment, under this external, we call it, some people call it PEST. You look at the political environment. How would it change? You look at economic. And then you look at S, social-cultural. What's going on? Are people's attitudes changing?
Before I came to LBS, we do a lot, but we're a little bit casual about how we do it because we have our daily jobs. So what we do is to commit the little extra time that we have. With the training I've gone through, I know that there's a lot more that I can do, because the more structured and organized the charity is, the bigger the impact, and that's what we are after.
think everybody, or we say everybody generates one waste or the other. Sometimes we may not even know that we are generating waste. But where we do know that we are generating waste, what do we do about it? Your first responsibility is advocacy. It's not direct to what you are doing, what you are earning, but if you do not advocate, it will make your life a lot more complicated.
Approximately 70% to 80% of the waste in Nigeria cannot be recycled. You have a waste problem, you have an energy problem, therefore you simply think you can marry them together, but it's a lot harder than that. And market knowledge is absolutely key, and I think a lot of people say they're in waste management, but they're only picking up one small part of it.
We're working with LBS, and we're hoping that this is not going to be the last one we're doing, but we also want you to not only learn, but also go out and also do better, so others can also learn through the process while you are doing it as well.
They took us out to see what is obtainable on the outside when it comes to the best practice in terms of sustainable waste management. One of the things we learned is on circular economy, where there's nothing like waste. Everything is being used at one point or the other. What I've been able to find a space in the value chain to say, okay, for me as an NGO practitioner that's passionate about waste management, where can I pitch my tent in a circular economy that will make a lot of sense?
As possible to limit terminal disposal. Because why? The world is now talking about sustainability and circular economy.
There is no waste in itself that is waste. So when I see something as waste, it's not really waste, it's actually another raw material for a new product. I'm an environmentalist, but I didn't really have a professional knowledge on what waste management is and what it entails. So coming to Lagos Business School for the leadership training, I see things from a very wide perspective now, not just the environment. I also have to think of the government, how people are affected one way or the other. Like there's a combination between all these things, and if one side is not properly serviced, there's every tendency that I might not be very successful in that field.
I've learned so much within the period of time I've spent in this school. I'm looking beyond the box, out of the box. I'm ready to go out and make impact.
It was really insightful. I learned much more than I imagined. The things I have in my disposal, I feel like I'm like a bomb waiting to explode.